This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney. An intriguing Thursday, to say the least. We will look at the political economics, the economic politics of this nation. Former President Trump speaking tonight, but all sorts of rumors, speculation, which we will let other people talk about, Paul. Just the facts. Let me know what the facts are right now within the American political system.
Exactly right, Tom. I mean, we're looking at the markets here today. We had a big sell-off in the tech stocks yesterday, Tom. Getting a little bit of a bounce back here today. The Nasdaq up about a third of 1% here in the morning, but folks just trying to get their sea legs here after what has been a couple of interesting days coming out of Milwaukee with the Republican National Convention. And then, as you mentioned, Tom, former President Donald Trump speaking this evening.
We're going to synthesize all that together for you. We start strong with Andrew Sheets. We'll get to him with Morgan Stanley in a moment. We're on YouTube. Subscribe to Bloomberg Podcast. That's all I can say. I sound like everybody else on YouTube. Hit the like button.
Right, exactly.
But subscribe to Bloomberg Podcast, and you do that by searching YouTube, Bloomberg Podcast, and we're right there. Front and center, growing every day with a great live chat, Apple CarPlay. And thank you to a gentleman for sending in. They're blowing up Android Auto and making it, I guess, much more palatable to everyone. Thank you for that. We're on Android Auto as well. We're in the Interactive Broker Studios with our Bloomberg Business Flash, Lisa Mateo.
Good morning. Tech stocks battling back. This is after worries of tight U.S. restrictions on chip sales to China. It drove its worst day since 2022. Now, a big part of that rebound, a beat from Taiwan semiconductor manufacturing. It actually makes chips for Apple and NVIDIA. TSMC, they also raised their projection for full-year revenue growth. Their ADRs up more than 1%. Checking with stocks that were affected by yesterday's trade concerns, you had NVIDIA, Advanced Micro Devices, Broadcom. They were all lower yesterday. Right now, NVIDIA up 2%, AMD up more than 1%, Broadcom up about 0.5%. We head over to NASDAQ futures up 0.3%, 73 points. S&P futures up 0.1% or 7 points. Dow futures down 0.1% or 57 points. The two-year yield 4.46%. That's up 2 basis points, and the yield on the 10-year 4.18%. That's up 2 basis points. On the economic calendar for today, initial jobless claims for last week comes out at 8:30 Wall Street time. That is your Bloomberg Business Flash. Tom and Paul.
Right to it, and we will do that this morning. Got a lot of politics coming. It's a very Brown University morning.
I know, exactly.
Got Wendy Schiller coming up, and right now, a gentleman who was outstanding in mathematics at Brown and in financial economics, Andrew Sheets, joins us. He's global head of corporate credit research with Morgan Stanley. Does a wonderfully holistic note. Andrew, I take real issue with the micro analysis now. And to me, the blunt instrument seems to be, once again, after retail sales, after a recalculation of consumer strength, we have solid GDP growth. To me, that's been the miscalculation of quarter after quarter after quarter. Why is that?
Yeah, thanks. Good morning. It's great to be here. Look, I think that's really important. This is an economy that's been, I think, consistently underestimated for going on 2 years now, and it's consistently showed resilience in the face of higher rates. And certainly fiscal spending has been part of that story, but I think an even bigger part of that story has been
on the latest edition of the Bloomberg Daybreak US.
Okay.
As well as...
we had somebody parachute in there, Andrew. Continue. That was like 4 floors away. They haven't had their morning tang. Andrew, continue, please.
Thank you. So I think you've seen resilience in the consumer as well as investment. You've seen American investment in manufacturing and infrastructure pick up in a way that we haven't seen in a very long time. So there are multiple drivers of this economy, and Morgan Stanley's base case remains that you get a soft landing this year and growth is around 2% in the U.S. this year and next year.
So given that backdrop, Andrew, from a credit perspective, how much credit risk are you suggesting investors take these days, and where?
Well, this is a challenge I think investors are facing. I mean, in some ways, I think this is an absolutely ideal market for credit. Credit likes moderation, and our forecasts at Morgan Stanley are full of moderation. You know, as I just mentioned, we have moderate growth around 2%. We have inflation moderating rapidly, coming down. We think the Fed will cut 3 times this year, so you have moderating policy rates. So this is a very good backdrop for credit. Now, the challenge is spreads are tight, so spreads are reflecting some of that. I think the way we're trying to frame that to investors is we think it's too early to position short. We think those spreads stay tight. We think there are still some pockets of the market like loans where you have yields above 9%. They're still attractive. But again, I think it's a market where you do have to be somewhat picking your spots as credit has incorporated some of that positive macro backdrop.
Well, I see in the, just across the fixed income spectrum, Andrew, U.S. high yield has been a great performer. What's supporting that? Because again, is that just kind of go to your moderation call there, that people are willing to take that type of risk?
I think it is. You know, I think it's the fact that, high yield is very sensitive to a recession. But to Tom's point, as the economy has continued to skirt that risk and be better than expected, that's been helpful. I think you are presenting investors with very high nominal yields that they haven't seen in a while. So if you can get, 7, 8, 9% on high yield bonds, that brings in demand. And, I do think that market is also not seeing very much supply. Because rates have been high, we haven't been seeing many LBOs. The debt that we have seen in high yield has been refinancing other debt. So it hasn't been net new bonds that the market needs to buy.
And now, folks, we speak to Andrew Sheets about what he doesn't want to talk about. Andrew, the political moment in the United States. I mean, you've been living this knee deep in the British elections. And I read a summary last night of the French elections. And folks, I had to take 2 aspirin. My head hurts so bad. Andrew Sheets, how do you link the political debate into your study of investment and finance? I think it's way overwrought, right? Kriti Gupta, she was on the edge of hysterical. With Nathan. Politics is, do you just ignore it, Andrew Sheets, or is there a use to studying the cacophony of American politics?
Well, I think there are a couple of things. One is I think a great deal of humility is important here, right? The market often gets both the outcome wrong and also the implications of that outcome wrong. I think it's also the case of the conventional wisdom is often wrong, right? I think there's probably a conventional wisdom in the market that, say, Republicans will be better for the stock market. The data over history is the opposite. The market's done better under Democrats. So I think this is a case where you do, as an analyst, have to try to focus on what you can quantify and also acknowledge uncertainty. And I think in the current setup, and I think we've seen this a lot in the recent market price action, we're getting closer to that election. Markets are rightfully, I think, focusing on the fact that these are candidates with very different policy proposals, very different visions. Yes, both candidates are proposing tariffs, but the scale of those tariffs is very different. Both candidates are proposing budgets with a deficit, but the scale of that deficit could be quite different. And I think that is what we're increasingly seeing the market trying to price.
One more question. You have the advantage of Michael Zezas, folks. It's like their own Morgan Stanley cottage industry of Washington analysis. Andrew Sheets, when you read Zezas in your own interpretation, should our listeners, our viewers, be concerned about the debt and the deficit?
So we think that the debt and deficits are issues that over the long run are issues that the U.S. is going to need to address, but we're not by any means in the camp that it's going to be an acute issue over the next 12 months. In fact, we're forecasting yields moving lower in the U.S. over the next 12 months. And again, some of this does depend on future fiscal action, which we don't know. We don't know the outcome of the election. But I think on current projections, it's something that over the long run we need to monitor. Over the short run, we're still forecasting yields lower despite that deficit.
Andrew Sheets, thank you so much. With Morgan Stanley, London. Out on YouTube, I teared up here.
Did you?
Tell
really?
I was choking up. It wasn't. Andrew, John, thank you. Paul Sweeney and gang, you are increasingly the most important insight I get on U.S. markets during the midday here in London.
There you go.
Michael Barr, that alone is a road trip to London, isn't it?
Exactly.
I thought you were crying because I walked in, but that's another story.
It is. Well, there's that too. I could see the four of us.
All right, we'll book the suite at the Ned. We'll be fine.
Yeah, Okay. A lot of comments yesterday in the aftershave. We'll cover that in the 8 o'clock hour. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. JD Vance used his address to the Republican National Convention to share the story of his tough upbringing and make the case that his party is the best to understand the challenges facing struggling Americans. Vance says he wants to help Donald Trump take back the White House in November.
A leader who rejects Joe Biden and Kamala Harris's Green New scam and fights to bring back our great American factories. We need President Donald J. Trump.
In his first primetime speech since becoming the GOP nominee for vice president, the 39-year-old Ohio senator spoke of growing up poor, his mother addicted to drugs, his father absent, and how he later joined the military and went on to the highest levels of U.S. politics. Former President Trump will speak tonight to close out the convention. Democrats worried about President Joe Biden's ability to win this November are making a renewed push for him to reconsider his re-election bid. And that includes a reportedly frank talk privately with Senate Majority Leader Chuck Schumer. Meanwhile, Biden is off the campaign trail. He was supposed to speak yesterday in Las Vegas to a Latino civil rights and advocacy group. Unidos U.S. organization president Janet Regia took the stage to make an announcement.
I was just on the phone with President Biden, and he shared his deep disappointment at not being able to join us this afternoon. The president has been at many events, as we all know, and he just tested positive for COVID.
Biden is isolating in Delaware, the White House describing his symptoms as mild. In round one of the Open in Scotland, American Chris Kirk is in a five-way tie for the lead at 2 under. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thank you. And thank you for all the news coverage, Michael Barr, since the difficult Saturday that we had. Seems ages ago with the assassination attempt. The way this was invented, folks, and Matt Winkler joined us a few days ago. When he founded Bloomberg News, he sat down and said, look, we have independence from obviously all that Bloomberg's doing in the terminal and, the Bloomberg professional service. But we're really going to try to avoid speculation and rumor. Paul, can you explain how we get to Friday?
Yeah, exactly. We'll see how it goes here. I mean, the news flow, again, coming out of Milwaukee, it looks like the Republican Party has got some certain momentum. You tend to see that around conventions, but it's certainly the case here with the Republican Party. And then on the Democratic side, we'll see how this develops. I mean, the reporting I'm reading coming off of the Bloomberg terminal is, the next several days will, again, be pretty important for the Democrats as they figure out where to go.
Well, it's going to well said, and I tell you, folks, it's really going to be something. The news flow overnight, just since 9 p.m. last night, as Michael Barr played that poignant video on the president's COVID. Nobody likes COVID at 81. I don't think. No. I mean, Barr he had it at 41, so it was a lot. But the basic idea here, folks, is the news flow this morning as you wake up across this nation and around the world is absolutely extraordinary. We'll bring you the best conversation we can. We're efforting Greg Valliere right now, his most blistering note in his career. That's my opinion. We'll see if we can get Mr. Valliere on the President of the United States. But we'll continue with our coverage from Milwaukee as well. Red and green on the screen from New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Tech stocks battling back after this week's slump. The tech-heavy NASDAQ right now, futures up about 0.4%, 78 points. We have S&P futures up 0.1%, 7 points. Dow futures, though, down 0.1%, down 64 points. We have the two-year yield, 4.46%, and that's up 2 basis points. The 10-year yield at 4.18%, and that's up 2 basis points. Commodities, we'll check in spot gold higher, $2,463 an ounce. We have Brent crude $84 a barrel, WTI crude $82 a barrel. To earnings we go. Domino's Pizza down more than 12%. Second quarter revenue fell short. The company said it's going to close nearly 10% of stores, Japan and France, because of poor performance. Then you have Blackstone down about 1.5%. Missed profit estimates. Its real estate arm, that actually weighed heavily on those results. And D.R. Horton down more than 1.5%. Narrowed its homes closed forecast for the full year. After the bell, it's on to, just before the bell, it's on to Netflix. The shares are little changed right now. That is your Bloomberg Business Flash. Tom and Paul.
Great summary, Lisa. Thank you. I got 8 ways to go there before we get to Kate Heck. We have Netflix this afternoon.
Yeah, after the close.
That's like a huge
huge
deal.
Yeah, exactly. So
I don't know why. What do I know? But I mentioned Queen's Gambit. I think it was yesterday.
That was great show.
But they're like the bellwether, aren't they?
They are. I mean, and so the question is, what does everybody else do? That's kind of what we're talking about. Even Warner Brothers Discovery.
Yeah, Warner Brothers and FT last night.
Yeah.
We don't have time to do that right now. But we're going to wait. This is a stunning article in the FT here, and I want to get to that with Paul. We'll do that here in a minute. We got to get to Kate. Kate Ackley, she's on her entire life. She's on Rocky Mountain Standard Time.
Rocky Mountain.
I mean, she's a Buffalo, so she's always on Mountain Time. Here she is in Milwaukee, half a wing. Kate Ackley, I got a serious question, and we're avoiding the rumor and speculation that's out there. Are the Republicans distracted by the Donnybrook, which is the Democratic Party future?
Distracted is not the word. I mean, they're just, that's one more part of maybe their optimism. They're really bullish on November elections. I was at an event last night after the main stage and the speakers, and this was a tax policy sort of event. People who support making the 2017 tax cuts permanent. And Speaker Mike Johnson stopped by and gave some remarks to the crowd. And, they're really talking, Republicans are really talking like they are getting ready right now for January and to have the White House, the control of the House, and win control of the Senate. Johnson was talking about they're already looking at their outline for the first 100 days of a Trump administration.
Yep. I find this just stunning. It's not for me to opine, but they're getting way out front.
Yeah, there's certainly some momentum there. And Kate, so what's the feeling, what's the feedback from Senator JD Vance's speech last evening at the convention?
So we talked the last time, and thank you for having me on again. The last time we talked a little bit about the changing Republican Party, and Vance is, a symbol and a reality of that, talking in a way that does not sound like the old Chamber of Commerce or Country Club Republican Party that is aligned with, big business, global industry, Wall Street, things like that. He talks like a populist and embraces that populism to some extent. Though you do see there is some agreement on things like tax policy for the most part, disagreement on things like trade policy. But the people that I have talked to on the ground, delegates, lobbyists who are here to support the party, or just mingle with lawmakers and government officials, they're just putting on that very unified. They feel good about their prospects in November and putting on a very unified veneer.
So what's the expectation for tonight's speech from former President Trump? Will it be a typical Trump speech, or will the events of last weekend, the failed assassination attempt, will that have an impact?
Well, what former President Trump said and what his campaign signaled was that this would be a different speech than without the attempted assassination over the weekend, that he was going to, go back to the drawing board. And, through the week, we have seen a lot of Republican unity. Although we have seen some divergence in views, we know that the Republican Party does have divisions over things like the support for the war and support for Ukraine in its war against Russia. We know that there are divisions on trade policy simmering under the surface.
Right.
But I think what Trump has done has managed to unify the party under himself, and I think he will focus on that tonight.
Okay, one more question. And it's come up, and I guess it goes to the Democratic side, but I'm going to take it to the Republican side as well. The president is extremely comfortable talking about foreign policy with his tenure in the Senate, et cetera. Except everyone, including Mike Allen this morning at Axios, observes when you get elected, nobody cares about foreign policy. Is it any different in Milwaukee? I mean, this speech tonight with the president, does he basically ignore foreign policy? Why not? No one cares.
I mean, you saw big cheers last night for when, JD Vance talks about America first. And I think you will see that Trump will be very much on that America first message.
Okay, so we're back to the 1930s, isolationist GOP. Wendell, I can't remember his name now, not LaRouche, Wendell, can't remember it, and I'll get it for you later, folks. But is this basically the 1930s pre-World War II GOP, Kate Ackley?
This is a reinvented Republican Party, or a reinventing Republican Party. I wouldn't say it goes back, that'd be almost 100 years. This is an evolving party that is embracing some of those populist, themes, and yet still very cozy with business interests to some degree.
Okay, Kate, thanks so much. Kate Ackley, Wendell Wilkie, Ari of the Rescue.
There you really.
Ari was in my ears.
How did
He's like,
Ari
hey, stupid.
get that? Wow.
I mean, he's huge. I mean, he bails out Lisa Mateo on a daily basis.
I mean,
Wendell Wilkie.
Yeah, sure. Who doesn't know Wendell Wilkie?
My grandfather had a button or something, from way there. But it's interesting, folks, and Paul and I aren't going to opine on this, but we're going to bring it up in Visible here on this historic day. Who knows what the Democrats are doing? I mean, we're getting reporting that I'm sure Professor Schiller will talk about, the former Speaker of the House, Pelosi of Baltimore and San Francisco, and a guy named Schumer from New York City.
Yep.
They've sat down with the president, not now, but a number of days ago, and said, okay, what are we doing here?
Yeah, exactly.
That's reported. That's not
That's been reported. And now with the president sidelined for a number of days with COVID, you wonder if this will be a time for reflection and more discussion among his aides and his confidants.
Well, COVID at 81. I mean,
exactly.
It knocked me out once. Yep. And, it's right before, my one vacation of the year. That worked out well. Anyways, thank you to Kate Ackley for the brief there out of Milwaukee. We're going to have a lot of coverage. Joe Matthew, Kaylee Lines leading our coverage. David Gura doing a ton at the Big Take on this. Gura's he's been lights out.
He's great.
He's...
Put him. You can put David Gura anywhere. He's going to give you great reporting.
Well, yeah.
And he can pick a good fiddle too, Tom.
Well, he can do that.
Yep.
Now, we got to discuss this. The governor of North Carolina rumored to be, if the president steps aside, one rumor is the vice president and the governor of North Carolina.
Okay.
But that would be a Chapel Hill vice president. Is that okay with you?
That's okay. That's okay.
I
mean, we Dukies, we have respect for North Carolina. We know how good they are because we play them all the time and we go against them all the time. We know how good they are.
Okay.
So there's some respect there.
Much more to come here on economics, finance, investment. Red and green on the screen. I got strong opinions about this. It's a drawdown. It's a pullback. It's a correction. OMG. From New York City on YouTube, stay with us. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. The NASDAQ looks set for a small bounce. This is after a positive earnings update from Taiwan semiconductor manufacturing, and that was thanks to surging chip demand. ADR is right now up about 1%. So we have NASDAQ futures up 0.3%, 67 points. S&P futures up 0.1%, 5 points. We have Dow futures down 0.1% or 74 points. We'll head over to the bond market. We have the 2-year yield at 4.46%. That's up 2 basis points. The yield on the 10-year 4.18%, and that's up 2 basis points. Shares of M&T Bank up nearly 1%. It reported profit figures beat expectations in the second quarter, and that was despite falling year on year. Nokia ADRs down more than 3%. Quarterly sales second quarter missed estimates and were the lowest since 2015, and that was due to the weak investment in mobile network upgrades. And United, they said deep discounts by those low-cost carriers were they're really weighing on the industry, and that its third quarter profit will fall short of expectation. Their shares up about 0.8%. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Surveillance correction. We do corrections whenever we're wrong, and I was not wrong, but I alluded to the idea way back long ago, far away, on this isolationist tendency, Paul Sweeney, that Wendell Willkie in 1938 was some of it. And to be clear here, Wendell Willkie was not an isolationist, but there was a whole ferment into Pearl Harbor among elites, left, right, and again, from the articles from a Midwest bias to we really don't want to go into a war of 1939.
No, I mean, Roosevelt, the best Roosevelt could get done was Lend-Lease, if you think about that. So.
And so, the it's not exact parallels, but it's going to be really interesting to see how former President Trump addresses this after what we heard from the vice president nominee last night. We turn to the bond market, and he's absolutely perfect to do this. George Bory is Chief Investment Strategist, Allspring Global Investments, really thinking about what to do, not what to talk about. George, what are you doing right now in fixed income?
Yeah, thanks. Good morning, guys. Good morning, Tom. Thanks for having me on the show. I think the central message for bond investors is that in this market, a little duration can go a long way. Bond yields topped out at the end of last year, and they have been on a slow grind lower. It's difficult to time perfectly, so trying to sort of catch the ups and the downs is not something that we would recommend. But a little bit of duration helps when yields start to fall, like we've seen just over the last couple of weeks. And so that is one part of the strategy. The other is just maximize your income. Bonds are doing exactly what they're supposed to do: steady, consistent, persistent income. That income compounds through time. You couple that with a little bit of duration, and the simple message around bonds are generating bond-like returns. There's a good chance bond returns will be between 5 and 10% this year, depending on sort of what type of bonds you hold. That's very good from a bondholder's perspective and for a bond investor.
Tom, here's a name you're going to like. George started his career at a firm in Boston. I'm sure you know Fleet Financial. You remember that?
Fleet Financial.
Awesome.
He read every morning Podorevsky and Podolsky. They published every morning. It was like gospel.
Yeah.
If you were Fleet, you know.
Fleet, serious credit training chops there.
It was great.
Hey, George, talk to us about credit risk. How much credit risk do I want to take here? If I look at the INGO function on the Bloomberg terminal, it just gives me some returns across fixed income. The best returning in the U.S. fixed income is U.S. corporate high yield at a little over 4%. Should I be taking that kind of risk here?
Yeah, no, I think that's a great point. I mean, if you look at what's happening in the economy showing some signs of deceleration, but we're seeing a big rotation on the stock side, and that also flows through on the bond side. When we look at corporate credit spreads are tight. We can say that. It's a sort of a truism, if you will. Investment grade credit spreads are, call it, roughly around 90 basis points. High yields roughly around 300 by historical standards. That's fairly tight, but yields are high. And so that extra income is helping, and corporate credit quality is doing just fine today. There are some spots of weakness, but they're in corners of the market. They're not in the central part of the market. And when we look at, say, the high yield market more broadly, you're talking about companies that are effectively mature, they're cash cows, and they're basically going to draft the broader economy. So with the economy doing okay, we see solid cash flows, relatively low credit risk, and it's that extra income that you get in high yield that's helping drive those returns that I mentioned before.
So are you advocating a laddered approach or a barbell approach that goes short like Paul Sweeney and go long out there 20, 30 years?
Yeah, that's a great question, Tom. Sort of the barbell strategy works for income at the front end of the curve and a little bit of duration at the long end of the curve. We want to maximize our income at the front end of the curve. So shorter duration, high yield can actually be quite accretive to a portfolio, given that yields in certain segments of that market are in 6, 7, 7.5% yields. But that little bit of duration further out the curve, it's your hedge against downside risk. And it's a way to capture kind of what's happening with monetary policy as the Fed, has pivoted and is likely to cut rates in the latter part of this year, and bringing yields down, is a way to capture that extra capital gain as yields come down. And so we do like that sort of barbell-y type of approach. I don't know if that's really a word, but we would call it's a little more nuanced. We want the income at the front end with a little bit of duration further out the curve.
How about mortgage-backed securities? A lot of folks are saying that's where some opportunities might be. How do you think about the mortgage-backed security market?
So mortgages are an interesting security from an investment perspective. I think the simplest way to think about mortgages in a bond portfolio, very high quality, obviously a diversified pool of residential mortgages back these securities. But what you're really playing is volatility, and bond or interest rate volatility peaked with yields at the end of last year. And perhaps even more important than the downward trend in yields that we're seeing is the downward trend in interest rate volatility. Bond prices still go up and down, but they're not going up and down quite as much or nearly as fast. And as a result, volatility is coming down. Mortgages are a nice way to play the decline in volatility. So we like mortgage-backed securities. We have them in a variety of our strategies, particularly in the multi-sector strategies.
Right.
They're high quality in nature. There's a little bit of extra income from spread, but as vol comes down, we would expect those mortgages to really outperform the rest of the bond market.
If we get an Ian Lincoln market at BMO Capital and we get the 10-year nominal to come in, let's say even the real yield breaks down, it hasn't yet, and let's say we get the mortgage, the 30-year mortgage comes down, George, or Sweeney's refinancing. George Bory, what does that do to mortgage-backed securities?
Yeah, no, if yields are coming down, they'd have to come down quite a bit at this juncture, given how high mortgage rates have gone over the past 2 years. But a drop in yields, allows mortgage holders, certainly ones with higher interest rates attached to their mortgage, to start to refi. And so that exercise, will start to kind of change the cash flow structures, if you will, embedded in some of these mortgages. That is an opportunity. Higher coupon mortgages, for the most part, look reasonably attractive because there's the chance of refinancing, but it's not a huge chance, and it's certainly not a huge part of the market at this point. So there are a lot of very interesting technical dynamics that allow a mortgage investor to sort of monetize the change in volatility, the change in the prepayment rates that ultimately kind of flow through in a mortgage security, and to really capture what are very kind of, at this juncture, fairly steady cash flows that are accretive to a bond portfolio.
Thanks so much. George Bory with us with an update there from Allspring today. And a basic idea, Paul, which I think particularly for younger people have never seen this. You can actually get a coupon.
Yeah, I know.
That's what we forget about. And sometimes they quote 6%, 7%, whatever. I don't have that in my head.
No, we haven't had that for a long time. So, we actually have real yield for investors here. And again, let's not forget municipal bonds. If you're in a high tax state, some of the, the triple tax-free equivalent yields on municipal bonds are really attractive. We hear from a lot of municipal bond strategists there. You got to keep that as an option in your fixed income portfolio.
No, we're going to have to see on that. Huge news day here, of course, out in Milwaukee with our coverage tonight of the speech of the former president of the United States. Joe Matthew, Kayla and I is leading our coverage. In the 1:30 hour today, Paul, help me here, 1:30,
Okay.
Governor Hochul
Yes.
in conversation with our David Gura.
Oh, very good.
And that will be timely, to say the least, particularly with the speculation and rumors around the president of the United States. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Day 4 of the Republican National Convention wraps up tonight in Milwaukee. Day 3 was about the GOP vice presidential candidate.
My name is JD Vance from the great state of Ohio.
JD Vance told his story of growing up in poverty. Former President Donald Trump will wrap up the convention with a speech tonight. Democrats worried about President Joe Biden's ability to win this November are making a renewed push for him to reconsider his reelection bid. ABC News reports Senate Majority Leader Chuck Schumer told him Saturday it would be best to drop out. Meanwhile, Biden is off the campaign trail after testing positive for COVID. Israel's parliament passed a resolution expressing formal opposition to the establishment of an independent Palestinian state, warning that it could serve as a base for terrorist groups. About 3/4 of the United Nations members have expressed their support for or recognition of Palestinian statehood, with Spain, Norway, and Ireland joining the latter category in May. The FX restaurant series The Bear is the hottest comedy going right now. But is it a comedy? That's what I said. With the Emmy nominations, the show about a sandwich shop set a record for most nominations ever for comedy at 23. And among the shows it's up against for outstanding comedy is the final season of Curb Your Enthusiasm. Curb executive producer and writer Jeff Schaffer says it's kind of weird to be up against a show like The Bear.
I love The Bear. Bear's a great show. It's not a comedy. And I don't think they think it's a comedy. No one thinks it's a comedy. And there's a reason for that. It's not a comedy. It's a really good drama.
Meanwhile, the first-year FX series Shogun got 25 nods, including Best Drama. The Emmys air September 15th on ABC. Finally, at the Open in Scotland, there is a 6-way tie now for the lead, including Americans Chris Kirk and Maverick McNeely at 2 under. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Let's audible this. It's called a dramedy. I have a member.
I'm a big fan of The Bear.
Yeah, I have a member of the family who's doing this. And there's a massive demand where it's comedy, but it's not comedy.
Is it dark comedy? Is that?
I don't know. I think it's a drama. Like, for example, I just watched the first episode of the 3rd season yesterday on the train. There was no dialogue, no live dialogue. It was just kind of 40 minutes of just kind of rehashing the lead character's kind of life and everything and how we got to this point. And it was, I mean, it's a serious drama. I mean, you know,
you weren't laughing.
Stuff.
You weren't laughing.
No, I mean, there's
what
some
do you
funny dialogue, but
I haven't seen it, full disclosure.
Now, Mrs. Linda is deep into it, and
Yep.
she says, you got to see The Bear. You got to see The Bear. And I'm like, all right. So she showed me the first episode of The Bear, and it was after a day where I already had a lot of drama in the news, and I just did not feel like watching the show. Not because it's not a good show.
But
I just was not in the mood to see it.
yeah.
It's like when you watch the Detroit Lions lose. It's difficult.
It's a drama because you don't want to see the Lions lose.
Right, exactly.
But, you know, we don't have time to do it here. I want to get to this Warner Brothers Discovery madness, but the bottom line is Shogun got a bunch of nominations.
Sure. Well,
too.
you've been touting Shogun. I mean, I'm
They
sure
spent
you got some of the back
$100
end, I assume.
$100 million plus on this.
I know, it's amazing.
But did people watch? That's what.
Yeah.
It was easier. The water cooler in the old days was easier.
Totally. There's no water cooler.
I've
issue.
never seen The Bear. I feel like I'm deprived.
But there's 3,000 shows out there at any given time. You can't watch all of them, as
Okay.
opposed to just the
thank
3
you
networks.
Michael Barr, thank you so much for that. Red and green on the screen from New York City. It's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red and green on the screen. NASDAQ futures up 0.4%, 85 points. S&P futures up 0.1%, 8 points. Dow futures down 0.1% or 57 points. The two-year yield, 4.46%. That's up 2 basis points. The yield on the 10-year, 4.18%, and that's up 2 basis points. We head over to currencies. The dollar stronger. Japanese yen weaker at 156.51 against the dollar. The euro weaker. British pound weaker. We have Bitcoin up about 0.2% at 64,709. To earnings we go. Abbott Laboratories. Their shares little changed. It boosted its full-year adjusted EPS forecast. Then you have shares of Novartis. They're lower. ADR is down more than 2%. It's closely watched prostate cancer drug. Well, that disappointed, and it really took that shine off a raised profit forecast. And Boeing's largest union voted to authorize a possible strike. Those shares down about 0.1%. And finally, Bud Light falling flat. It dropped to the number 3 spot. U.S. beer sales behind Constellation brands Modelo Especial and also Michelob Ultra. That's according to an analysis of Nielsen IQ data. That is your Bloomberg Business Flash. Tom and Paul.
We now go to our authority on a can of Budweiser, Paul Sweeney. I mean, Bud Light's un-American. I get that as well. But is anybody buying beer anymore?
I don't know. I mean, I think it's kind of a flattish category from what I can tell. Yeah. So I mean, there's so many options out there. Tom, the kids are drinking. What are they drinking?
The seltzer.
The seltzer stuff, all that stuff.
But you know what's come? The light beers, like Modelo has Oro. Okay. You know, they have like the 90-calorie ones.
My dad had Michelob in the refrigerator growing up. That's what he had, the Michelob bottles growing up.
Ultra? Okay.
No,
not even Ultra.
Michelob. Go back and Google that.
My mother was all Miller, the champagne bottle beers, which is now cool again.
It is cool.
What's that about? And my father was, which one costs under $3? That was his favorite.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
The front page is the Lisa Mateo Hour, brought to you by IBKR. Financial advisors switch to Interactive Brokers, their lowest cost. Global trading and turnkey custody solutions. There are no ticket charges, no conflicts of your interest. Do that at ibkr.com/RIA. We start strong with a Paul Sweeney nugget. I saw this, Paul.
Yeah.
I said, are you kidding me? Lisa, discuss.
All right, so Warner Brothers, apparently they need to boost their share price, right? So they may be looking to split its digital streaming and studio business from its TV network. So this is from the Financial Times. They're saying CEO David Zaslav looking into a few options from selling the assets to actually, splitting off its Warner Brothers movie studio and that Max streaming service into a new company. They haven't hired an investment banker or anything like that, but its top manager reportedly talking to advisors. But I mean, the whole thing is about, I guess, boosting the share price.
Yeah, and the thing about Warner Brothers Discovery, they have two very interesting big investors. One is cable billionaire John Malone, and the other one is the Newhouse family, which controls Condé Nast. Very, very smart media folks there.
Yes.
And they know where the value is, and the value is probably in the streaming businesses, not necessarily in some of the legacy networks.
In our vast offices here, the surveillance offices, I sat 15 feet that way the day Chrysler ran over the bondholders. And I'm sorry, the FT explains this beautifully.
They do.
Folks, what they're going to do is take the gazillions of debt and put it into the news division as they wander off with Sweeney's streaming company. Mm-hmm. Paul, you got to be kidding me. In this day and age, they're going to get away with that with bondholders?
I don't know. I don't know. I mean, again, it's interesting. They have so much debt on this company that they have to put the debt where the cash flow is to support the debt. So we'll see. But again, this is a typical... it's such a typical deal. I'm already envisioning the pitch book that I would have put together to go to the board, to go to the management here. It's just right out of the central casting of of M&A, divestitures.
But are those times still in play?
I think
I wonder the rules of the road has changed.
They may have, but boy, look at the principles here again. John Malone, the Condé Nast, David Zaslav, the CEO. this is in their wheelhouse. They think about these things. Where's the value and what can support the debt? So we'll see.
Okay, so I can bring it up on the Bloomberg. I got $42 billion in debt.
Yep.
And they're gonna give that. They're gonna hand that to Wolf Blitzer.
Yes, exactly. We'll see.
I mean, that's exactly what we're talking about, right? Margaret Brennan. Here,
Yep.
Margaret, you take $10 billion in debt, and Wolf, you take $32 billion in debt.
Sure. And
that's what we're talking about.
And there's $10 billion of EBITDA to support that, so it's about 4 times net debt to EBITDA. That's okay. It's not crushing.
Agreed.
But it's tough. They were at $52 billion in debt just a couple of years ago, so they are paying it down. They've got $5 billion a year in free cash flow. There is stuff there to build on, but I'll leave it to Lisa.
We'll get Rich
Lisa will
Greenfield
figure it out.
and Moffat Nathanson and the rest. We'll get the adults in here to describe this. Maybe Mario Gabelli. I'm sorry, Lisa. We get carried away on that. What else?
No, it's good. It's good. Another deal. Okay, this is for the WNBA. Apparently, the framework is set. The new media rights deal with Disney, NBC, Amazon. It was first reported by The Athletic. The Wall Street Journal confirmed the numbers. The league set to bring in approximately $2.2 billion over 11 years. Now, if you break down the numbers, so the WNBA's current media rights valued at about $60 million per year. This new structure would be in the annual range of $200 million. So you see
Still
the
low.
Still
Low.
Right. That's
in
the
my
thing.
opinion, still low.
I mean, we're talking about
I
there's
would
so
not
much
lock up that long.
excitement behind the WNBA.
Yeah, if I were the
now.
WNBA, I would not lock up for this long. I think.
Okay.
I think they're really at the cusp. This Caitlin Clark and all the other great young players into the league. It's everywhere. You go to ESPN.com, you pull up the app, you get the WNBA stuff before you get like Major League Baseball. And that's how they rank it. It's unbelievable.
Yeah.
So if I were the WNBA, I'd go short here on my deal. But that's just
okay. What do you got next?
Citadel founder Kenneth Griffin, yes. He apparently has a thing for collectibles. So he set a record for a fossil sold at auction. He paid $44.6 million at Sotheby's for a 150 million year old stegosaurus. Its name is Apex. It's about 11 feet tall. It was found in Colorado.
Oh.
It was actually expected to get $6 million, but he paid $45 million for it. Some people say he wants to lend it to a U.S. museum, but I mean, he's done these trophy pieces before. Okay. But this is just
go buy a sports team.
I guess he likes buying.
All right. Well, that's cool if he donates it to a museum, so everybody can see it.
ABC has a Tyrannosaurus Rex. That's the mean one.
Okay.
The big,
Yes.
in the movies.
The meat eater.
Its nickname was Stan, and it sold for $31 million 4 years ago. Thank you, ABC, for that. I made a joke about Legos. I mean, the kids are all into it, and then it's over. Then they move on.
Right.
You know,
They're done.
it's a Stegosaurus. There's one, and I think it's in England. I can't remember. There's one that's very cool. It's like in a museum, and
it's got the bumps on the back or something like that.
Oh, you're nailing it, Paul.
Yeah, I'm nailing it.
You're just killing
it. Take it back to my
geology with Paul,
exactly.
Duke University. Lisa, save us.
Okay, the last one. This one's for the kids.
Yes,
You talked about Legos and stuff, okay? This is a new Beanie Baby. If you've heard about it, you know, Beanie Babies kind of faded after a while.
It's a big deal, though.
But it is a big deal. So now they have something called a Beanie Bouncer. It's this little 4-inch toy, and you can bounce it. It has a ball inside, and it goes about 50 feet high. So the kids are going to wreak havoc inside your house with this.
Exactly.
So you got to take
Who
it
wants
outside.
that?
Oh, I see it. Okay.
Take it outside, okay? But they're saying that it's got the patents for it. It's going along with the patents. It comes in like 12 animal characters. But this could be the hot new thing at Christmas.
Remember the rubber ball that you slammed on the driveway, and you tried to get it to go over the house? Which you did 4 or 5 times until a second floor window went out.
Or got stuck in a gutter.
Part. But it's good. You get the kids outside. See, get them off the technology, get them outside.
I'm all for that. Anything.
Do your kids go outside?
They do because they're forced to. I mean, they have sports every day. They're outside for hours at a time.
It's a huge deal.
But you have to get them off. I remember when they were little, like getting them off the devices and getting them outside. Got to do it.
It's difficult. Okay, well, thank you, Lisa. Is that it? You have one quick one?
That's it. You know, there was one about alcohol being bad for your health, but that was in the journal. But I figured that wouldn't go. That wouldn't go over very well here.
You know,
Not in this room.
Thank you, Lisa. Yeah, I said, nah, we'll pass on that
Next.
one. Red and green on the screen. What do I see that matters? What matters is gold. Not enough chat. Gold higher. Nathan Hager tonight. Black tie. Nathan Hager, the Kennedy Center. Bonnie Raitt. the dead.
Wow.
Honors for Jerry Garcia. Good morning.
Promise them everything. Why they all believe him, he wears a big diamond ring. Run, Alabama, get away, get away. Alabama, get away, get away. Only way to please me, just sit down and leave and walk away.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. 2 days in a row.
I know.
Lisa Mateo.
Big.
I mean, she's like.
I mean, you know,
here.
she's at the beach. She's in Hollywood. We don't know where she is.
We don't know where she is. She's here, which is good.
Good.
Surveillance brain freeze correction. How about the rain last night?
Yeah.
Tornadoes near Rochester.
Yep.
Canandaigua. You didn't think I could pronounce that?
Nope.
No,
we had some, in the swamps of Jersey, we had some serious rain. Boy, I'll tell you that.
We had both dogs sleeping on top of us. I mean, they were not happy. Brain freeze. I mentioned earlier Margaret Brennan with Warner Brothers Discovery. I apologize. Thank you, Jonathan, for catching that. With Paramount.
Paramount, of course.
I can't keep track.
Yep.
CBS.
I know.
I can't keep track of
They're all in play. Who knows what's
They all
going
have
on.
cash flow is the
Yes.
bottom line.
Yep.
To pay for the bond deals. What we have is Jim Bianco. We're going to get right to it because this is a really, really important conversation. You know I hate the Fed speak, except Jim Bianco's really, really interesting right now on the Fed speak. From our Interactive Broker Studios, Bloomberg Business Flash, El Mateo.
You got it. Tech stocks, they are battling back. Worries that the tight U.S. restriction on chip sales to China, that actually drove its worst day since 2022. A big part of that rebound, though, this morning, a beat from Taiwan semiconductor manufacturing. That actually makes chips for Apple, NVIDIA, TSMC. They raised its projections for the full year revenue growth as well. ADRs, they're up more than 1%. So what I want to do is check in with chip stocks that were affected by yesterday's trade concerns. You had places like companies like NVIDIA. They were down yesterday, now up 2%. Broadcom up nearly 1%. The only difference here is Advanced Micro Devices, still down. They're down more than 10%. We have NASDAQ futures up 0.4%, 84 points. S&P futures up 0.1%, 9 points. We have Dow futures down 0.1%, or 46 points. The 2-year yield, 4.46%. That's up 2 basis points. The yield on the 10-year, 4.18%, and that's up 2 basis points. On the economic calendar for today, initial jobless claims for last week. That comes out just about a half hour from now. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. You know, folks, I'm not big on the parlor game. I really don't care about 4 rate cuts, 8 rate cuts, bada bee, bada blah. But what I do know is it's a lonely crew saying the consensus is wrong. I'm going to put Lindsay Piazza at Stifel in that group, and the leadership of Jim Bianco has been profound. He absolutely nailed the challenge of the last mile of disinflation. He joins us now from his Chicago. Jim, your note is just piercing. You don't see a Fed cutting soon. Discuss.
Yes, I don't think the Fed should be cutting soon because I don't think that the economic data is supporting a Fed rate cut. And that is that the slowing that you've seen in the U.S. economy might have already bottomed. It is growing at somewhere at around 2.5% for the second quarter. That's fine. And I think that the inflation rate, while it's come down, has largely been in a 3 to 4% range for the last year and a half. It's back to 3%, the lower end of the range. And to use a fancy term, there's some residual seasonality in the data, meaning that you get all the weak inflation data in the summer. And that's what got you down to 3%. And then as we move into the fall, I think it stiffens up a little bit. So the Fed shouldn't cut. But it looks like they're intent on cutting. So
okay, but Jim, your note is inflammatory. I mean, it's really something. You've got, for the sake of discussion, an R-starred set, and we're not talking 2.x%. We're not talking Richard Clarida. We're talking a Jim Bianco 3 or 4, and you even print the number 5. Is America ready for a 3%, 4% R-starred?
America's ready for it because the economy can handle it. The financial markets can handle it. It's the economic community that's not ready for it right now. If you look at the current level of interest rates and you listen to Fed speak, they talk about it being highly restrictive. It might be retarding the economic growth. And again, look at the stock market. Look at the rally in small cap stocks when we started pricing in September in the last week or so. And the data is just not there. But the economists still cling to this, that the neutral funds rate, which is what R-star is 2.5%. And put this in terms, the Fed thinks they need to cut 10 times to get to neutral. That's why they want to get started. They got a lot of work to do. The market is probably telling them, no, you probably need only about 4 or 5 cuts to get to neutral. There really isn't any hurry. But if you're going to give me stimulative interest rates by lowering them, then I'm going to pile into small cap stocks, and that's what we've seen in the last week.
And Paul, on YouTube live chat, they nail it. It's a Sweeney live chat. 6% cash.
Yeah.
I mean, that's maybe what Jim's talking about.
What's wrong with that? Hey, Jim, we have seen that rotation into small caps. What do you make of that? Because, I mean, what I'm hearing from some of the strategists is that's a rotation like we've never seen before.
Oh, yeah, I agree. I mean, I've looked at the statistics, and it is unprecedented depending on how you look at it. And usually when you get a massive rotation in the small cap stocks in the past, it's because the market is literally collapsing and big cap stocks are going down faster than small cap stocks. This one is everything's going up, except for yesterday, and small cap stocks are going up a lot more. But I really think what it is that this is such a macro dependent market, and that negative 0.1 on CPI, you know, the bell went off. That's it. The Fed's going to give us cheaper money. Let's go to all of the lagging companies, and let's go to all the companies that have borrowed more, and that would be in the small cap space, or have losses in the small cap space, and that cheaper money will benefit them. So everybody started to exit large cap and ran into small cap to a degree we've never seen before. So there is no historical precedent for what this means. Like what does this mean a month or 2 months later? Because we've never seen it, especially in a rally.
So this is an election year, Jim. How does that impact the Fed really at the end of the day?
Well, it should, and it has in the past. And to be very nuanced about it, the Fed has never changed direction between Memorial Day and Election Day. Changed direction. If they were hiking, they continue to hike. Cutting, continue to cut. Hold, they continue to hold. They're talking about changing directions in September by cutting rates. That is unusual, and the fear is that interjects themselves into the political debate because Donald Trump won't be happy. He'll say that Jay Powell's trying to rig the election against him, and then the Fed would prefer that their name not get mentioned between now and Election Day, and so they shouldn't be part of it. Now, what does it mean for markets? At a macro level, stocks, bonds, the dollar, I don't think you could really see the machinations in the election there. But when you go further down the line, if you look at maybe the meme stock of Donald DJT, Trump media, that one goes up and down. Tesla seems to be another stock because Elon Musk is so tied himself with Donald Trump. If you look at maybe the prison stocks or the body armor stocks, because there's going to be more spending on police and protection, those kind of things are moving, but not at the higher levels. Are you really seeing this election impacting the market?
Jim, what's the stock market do here? I mean, away from the economics and all, do you have an SPX or Dow Jones faith out 12 months?
Well, the stock market, I think, is going to really take its cues from interest rates. It bottomed in September of 2022, and it's been rallying. And there's only been 2 times when it didn't rally. A 10% correction between June and October of last year, and March and April this year, a 6% correction. What existed during both those corrections? The 10-year yield above 4.5%. When the 10-year yield gets above 4.5%, the stock market seems to struggle. We're at 4.18 right now, so we're not above 4.5%. But if the market starts to feel like the Fed's going to ease, the economy's okay, this inflation problem is not solved, the rejection of that policy could be higher interest rates. And if it gets above 4.5%, that could become a problem for the stock market. Mm-hmm. So right now, I think it's going to be okay. It's just going to go through this massive rotation that we haven't seen before. And it's going to be really dependent on whether or not interest rates start to head higher. Right. And I'll conclude by saying, I ultimately think by the end of the year into the first quarter, they will get well above 4.5% again, and it will be a problem. But they're not there right now.
Jim Bianco from Chicago. Thank you so much, Bianco Research. Really important comments there, pushing against the Fed zeitgeist, to say the least. Red and green on the screen right now. The VIX elevated 14.53. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. JD Vance mixed his personal history with a populist message as he accepted the vice presidential nomination at the Republican National Convention.
When I was in the 4th grade, a career politician by the name of Joe Biden supported NAFTA, a bad trade deal that sent countless good jobs to Mexico.
Bloomberg's Laura Davison has more from Milwaukee.
He and Donald Trump, he said, would not cater to Wall Street and instead focus on the working man. He, unspooled his personal history throughout the course of this speech. And Vance is only 39 years old, and he referenced the financial crisis, and he blamed what he called, quote, Wall Street barons for, the housing affordability crisis we have today of, the market crashing, and then, builders being put out of work, and then there being low supply. And he kind of creates this through line, also blaming illegal immigration for there being too much demand for housing.
Bloomberg's Laura Davison. Tonight, former President Trump will close out the convention with his address. Just as President Biden was doubling down on offering some messaging of his own to counter the Republican National Convention, Biden was diagnosed with COVID-19. This new pause from the campaign trail comes as new, more powerful voices from within the Democratic Party say he should leave the race altogether. The president's doctor said in a statement that he has mild symptoms. Dr. Celine Gounder, editor-at-large for public health at KFF Health News, has more on President Biden's COVID diagnosis.
Older people, even those who have been vaccinated and boosted, are at increased risk of developing a more severe case of COVID.
Dr. Gounder spoke to CBS. The White House says the president returned home from Las Vegas to Delaware and will self-isolate. At round one of the Open in Scotland, American Justin Thomas is at the top of the leaderboard at 3 under. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul, the Jim Bianco comments are really stunning. I mean, that's a lonely call right now, that this is a Fed that's just got it wrong, fighting the last war.
Yeah, exactly. And, but then on the other side of the fence, Tom, there are people out there, both in academia and in the public markets, that are saying the Fed's already behind the curve. They should have been cutting already. So you have, two sides of that call there. But again, the market seems to be pricing in, Tom, a pretty decent chance of a Fed cut in September. But as Ira Jersey likes to remind us, there's a lot of data between now and that decision. So
I agree with the data. And my number one data point is 3 cups of Sanka ago, we were talking about sub 2% GDP, and now we're modeling out ending June 30. Once again, growth is better than expected.
Growth is better than expected. The labor market, while weakening, is still strong. And the consumer, we saw from the consumer spending numbers, retail sales just this week, very solid there as well.
You watching the British Open this weekend?
Absolutely.
How do you watch it? I don't even know.
Well, I mean, I'm not even, to be honest with you, I don't know where it is, but I'll find it, like a lot of people. But it's just a different type of golf, and it looks different.
It's on in the morning?
It's on, but they play it all day, all night. When you get these majors that golf, whatever networks have it, they're like, we're going to watch this.
Most wonderful memories of Tom Watson.
Yes.
And that's all I can say.
They love
great.
Tom.
Running green on the screen right now. Please stay with us. Wendy Schiller coming up next. That's important. This is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Some news from the ECB. It's leaving its main refinancing rate at 3.75%, at 4.25%. The survey was for 4.25%. So you see that there's no difference there. Moving on right now, I want to check in with the stock 600. It's up about 0.3%. We have the DAX in Germany up about 0.1%. Over to the CAC in Paris up about 0.6%. We head over to the U.S. We have the Nasdaq futures up 0.4%, 92 points. We have S&P futures up 0.1%, 8 points. Dow futures down 0.2%, or 82 points. Looking at yields, a 2-year yield 4.46%. Up 2 basis points. The yield on the 10-year 4.18%, and that's up 2 basis points. Heading over to spot gold, higher at $2,467 an ounce. We have Brent crude $84 a barrel, WTI crude at $82 a barrel. Moving the markets, that would be Tex-Mex restaurant Chuy's Holdings. It's up right now about 47%. Well, the reason why Darden Restaurants agreed to buy the company. And then we go from Mexican food to pizza. Domino's Pizza down more than 12%. Disappointing second quarter results.
This is the most ungluten-free I've ever heard of.
It is Mexican and now pizza. They had the discounts, new product launches.
Yeah.
It just wasn't enough for consumers. And before the close, right before it, we'll hear from Netflix. Their shares little changed. That is your Bloomberg Business Flash. Tom and Paul.
Never heard of it.
Mrs. Keene tried gluten-free pizza the other night.
Not bad.
No.
California
No, please.
cauliflower crust pizza.
Oh,
there
gosh,
you
stop.
go.
God.
I'm never going to the Mateo house.
Okay,
Never gonna be invited there.
I can do this with Wendy Schiller. She's at Brown University, and she's been to every bar, every place that sells Narragansett lager beer in Rhode Island. And when I was 39 years old, 2 or 3 nights a week, I was at Lupo's Heartbreak Hotel.
Really?
And they serve the Narragnsett in plastic cups.
Yep.
Professor Schiller knows this is way back. You go down to the dockside in Newport, listen to the blues and NRBQ and all that. Wendy, 39 years old. I'm a vice presidential nominee. Is that too young?
No, I don't think it's too young. I think he's navigated a political career after being JD from Yale Law School and writing a bestseller. I don't think it's too young. I think that's one of the things that Americans are looking for, right? This big contrast between our older main candidates and the VPs being younger. I think William Jennings Bryan would have enjoyed JD Vance's speech, Tom, last night.
Yeah.
It struck almost identical themes to 1896. I don't know if that should reassure people or make them very frightened that we're going backwards. But nonetheless, no, I don't think so at all. I think that he's positioning himself to be the heir apparent before Trump even wins this election. So that's an interesting political dynamic in the Republican Party.
Bill Clinton, 46.5. George W. Bush the younger, 54.5. President Obama, 47.5. I guess the trend's there. We've been talking this morning, Professor Schiller, about isolationism. What's the character of the Trump-Vance isolationism?
Well, Trump has successfully pitched this in 2 ways. One is we get bad deals when we go into multi-nation agreements, particularly NAFTA, which he renegotiated, which, by the way, was triumphed by Newt Gingrich and the Republicans in the House in 1993. So I thought it's amazing that they just pushed this all to the Democrats. It was pretty clever of them. So that's one way, right, is that we just don't get a good deal when we're part of these multi-nation accords, and economically we suffer. The other is in military arrangements, we end up paying most of the bills. And that's what Trump had said in 2016 through his presidency. And he's saying, again, that resonates with a lot of Americans, particularly in a time where they see that they're struggling to pay their bills because of inflation. So it's clever to bring these two issues together, mostly under an economic tent.
Wendy, what do we expect to hear from the former president tonight at his speech?
Well, Paul, Donald Trump has remained more disciplined in the last 2 months of his campaign than we've ever seen him, either as candidate or president in prior years. Incredibly disciplined. So if the speech, which he gave in 2016 was, I'm going to make sure we're safe from crime and I'm going to block immigrants, I think it's going to be very similar to 2016, but it might be just a little bit more moderated, just a little bit. He has squashed abortion at the Republican convention, which is really remarkable given that it's been the driving populist force in the Republican Party for so long. So if he stays disciplined and doesn't look literally too scary to independent voters, then I think they're going to walk away and think this convention was a big success.
Let me break in here, Paul, with Professor Schiller of Brown. At the European Central Bank, as expected, they leave key rates unched. They wait for signs inflation is under control, and they say that Christine Lagarde will not swim in the River Seine in Paris.
The Olympics. Wendy, it certainly appears to a lot of folks, including myself, that this has been a really solid convention for the Republican Party. How much momentum do they have coming out of this?
Every party, if they can pull off a successful convention, has momentum coming out. Mitt Romney had a lot of momentum coming out in 2012. The public focuses on the party in that week. And if everybody looks good and sounds good, they think, hey, maybe this is the party we're going to go with. When we have incumbents, they're bringing their priors with, anything that would push them away. That was the risk for the Republicans, is that they've got this energized base, more unified now from lots of factors, including the tragic attempt on Trump's life. So now they got unity and energy. And, did they mess it up? And they did not mess it up. And that's why I think their momentum continues. The Democrats are the exact opposite. It's starting to feel a lot like 1988 when there was a quote unquote winnable election for the Democrats and somehow they lost it. So I think the Democrats are under tremendous pressure to generate energy. And finally, I will say that may require that Biden step aside very soon in order to give them the time to ramp up that energy for their own convention.
So where are we with that? I mean, it seems like from past discussions, Wendy, that this is the decision solely on President Biden. Can he be persuaded to perhaps step down or create a process for a new candidate?
Well, Paul, the biggest difference between 2 weeks ago and now is that, chief donors, not just George Clooney and the New York Times, but, the people who are actually really writing a lot of checks have stopped. Basically freezing the money. They're not giving the money. That's trickling down to Senate and House races as well, and that means the party could completely collapse. So without any money, it just strikes me that Biden doesn't have a lot of choices here. And the question is, will he directly, send his delegates to Kamala Harris or send it to an open convention?
Right.
And I think he's still waiting to hear about that, Tom. He's still waiting to hear, do you have a choice? Is the party unified around Kamala? If so, then I'll get out.
Okay, well, maybe that's polling. How do you envision a quote-unquote open convention? Like from this Sunday forward, what does that look like, Professor Schiller?
If you ever imagine a political nightmare, an open Democratic convention in 2024 would be that, because it will expose the fissures and fractures within the Democratic Party between the very progressive left, the progressive, the middle, and they won't be able to agree. They're going to want their person to challenge Trump and try and make arguments about that, all the way from Bernie Sanders, Elizabeth Warren, all the way down to dark horses like Gina Raimondo, Secretary of Commerce, and Gretchen Whitmer might be dragged back into it. Josh Shapiro of Pennsylvania. It will look like the Democrats can't decide and don't know what they're doing, and will only feed into whatever nostalgia Trump voters have for Trump, but also independent voters who want a stable system. And this is the big irony of 2024 now, that Trump and Republicans appear right now to be more stable, less chaotic than Biden and the Democrats.
Professor Schiller, thank you. Really appreciate it. Not day after day, but pretty much every other day, every 3 days.
Yep.
Hugely valuable at Brown University, typically on international relations, and we're looking at stuff we'd never talked about.
Yeah.
We never thought about.
No, and we thought, Tom, that these conventions were going to be very important to both parties, and certainly for the Republicans, it has shaped up that way. And we'll see how it plays out for the Democrats here, as Professor Schiller was just laying out some of the options.
There's a lot of conversations today, and this one's underplayed, and I don't think it should be. She's the governor of New York. She's from Buffalo. In another time and place, David Gura would talk to Kathy Hochul about New York City funding of infrastructure, the congestion tax.
Yep.
How does David do that today with the absolute nuts news flow within her Democratic Party?
Right, within her Democratic Party. And again,
talk about rip up the script.
Exactly. So we'll
Let's
see. But David Gurr can do that, though.
David Gurr at 1:30 today with the governor of New York State, Kathy Hochul. From New York City and from Milwaukee, this is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. The ECB holds rates steady, gives no indication of a September cut, saying that most inflation measures are stable or edged down in June. Right now, we have the euro. It's little changed. We get to the U.S. Right now, we're waiting jobless claims for last week. Those are going to be coming in, and we're just moments away. Investors kind of looking for some insight into the health of the labor market. Economists estimate that it probably increased last week. Let's see. There you go. So the survey was for 229,000. Came in at 243,000, so that's higher than the prior at 222,000. We move on to the markets and see the reaction there. You have NASDAQ futures still up about 0.5%, 111 points. We say S&P futures up 0.1% or 10 points. Dow futures down about 0.1% or 59 points. We have the 2-year yield 4.43%, 4%. That's little change. A yield on the 10-year, 4.16%, and that is little changed. Moving to earnings, shares of Blackstone, they're lower. They're down about 2%. Profit missed estimates. Real estate arm really weighed on those results. And from real estate, we go to home builder D.R. Horton. They're down more than 1%. Weaker than expected orders in a quarter that was filled with high mortgage rates. And finally, Nokia. ADR's down more than 3%. Quarterly sales, second quarter missed estimates. They were the lowest since 2015. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Our economic indicators always brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Real interesting comments from Jim Bianco here in the last hour. Eric Winograd joins now with Alliance Bernstein, hugely venerable shop here. And I want to tear apart a Bianco belief, Eric, and see how you push against it. He just says the Fed's fighting the last war. The neutral rate could be higher than anyone ever expected. And this is a Fed that really can't cut rates or really has to have respect for the decision to make the first cut and wait. Consensus is pushing against it. Where are you?
I'm with consensus on this one. I think that the first rate cut is coming in September. I think the Fed has been pretty clear about that. Honestly, I think there's a decent case to be made that they should cut in July. And the reason I'm not forecasting that is because they've told us they're not going to, more or less. So, I think September is the likely time. I don't think Jim's entirely wrong. I do think the neutral rate is higher than it was. But the neutral rate can be higher and you can still cut, right? They're still above that neutral rate.
All right, so Eric, there's a lot of folks that feel like this Fed's already behind the curve, that they should be cutting already. Are you in that camp?
Look, I don't think it's a matter of urgency in the sense that if they don't cut immediately, it's a disaster. As I said, though, I think you can make a good case to cut in July. The disinflation over the past few months is pretty significant. We have seen some, the Fed is calling it rebalancing of the labor market, and I think that is still true. But if the direction of travel continues in the way that it is going, it will start to look like weakness rather than rebalancing. And so I think it's important for the Fed to start to move sooner rather than later.
If we have just had an Atlanta GDP now number where there was a belief in a sub 2% growth, and all of a sudden we're reframing out to a positive 2% growth, is that export-import, or is that seen in domestic final sales where the U.S. economy is just flat out doing better than anyone expected?
Well, so look, domestic final sales are the thing that I think is most important. This is still an economy that is 2/3 household consumption driven. And if you annualize the numbers we've gotten in the first half of the year, that's running at about 2%, which is okay. Of course, last year we were running close to 6%. So there is clearly a slowdown underway there. And with some of the leading edge data on the labor market suggesting, again, this idea of rebalancing, I think there's reason to expect that slowdown to persist. Again, here I would say slow down, not collapse. We're not looking at something that's disastrous. I think we're still looking at a soft landing. But a big part of the way that you keep that landing soft is to cut rates along the way. You can't wait until it's clear that the economy is rolling over, because if you wait that long, you've almost certainly waited too long.
So are we actually in? Have we achieved the soft landing? Has the Fed kind of done its job?
Yeah, look, I think that's the most likely case. It's a fun sort of question because people always say, well, where does this business cycle end? It's a cycle. It never ends. It just keeps spinning, right? To me, once the Fed starts to cut, the previous cycle will have ended and we will have started a new one. And I think the best available evidence is that cycle has had a soft landing. I do emphasize, though, that, soft is the adjective there. And landing, there is still a landing. This means a period of below trend growth, which is what we expect. But again, the way you keep that as below trend growth rather than a recession is to ease conditions along the way. I think the Fed gets that.
Is there a polarity, Eric, in the economy where even if we at some point slow down, the haves continue to do better and the stock market continues to do better?
For sure. I mean, I think that's absolutely the case. And, one of the really striking features of this cycle to me has been just how strong the stock market has been. despite significant rate increases, and now despite evidence of this upcoming or slowdown that is either upcoming or already underway. The stock market just continues to sail through. I think there are a lot of reasons for that, to do with tax policy and the way that the structure of the tax code favors corporate earnings and so on. But it is truly a remarkable phenomenon, and one that I think has exacerbated sort of the inequality and the populist nature of the inequality that defines the economy, and the populism that sort of stems from that.
Hey, Eric, we had some employment data come out today. Initial jobless claims came in a little bit higher than expected, 243,000, but generally kind of in line with what we've seen over the past 6 to 12 months or so. What's your view of the labor market here? Where are we?
We are rebalancing. I think the Fed is still right to call it rebalancing rather than weakening. But the labor market is no longer overheated. If you think back a couple of years ago, the topic that we would have been discussing were labor shortages and how businesses were having to pay significant wage increases in order to find new employees. And that's not the case anymore. The labor market is still strong. The unemployment rate is still very low by historical standards. We're still adding a couple 100,000 jobs a month in non-farm payrolls. And even jobless claims, which, as you note, are a little bit higher than they were 6 months ago, aren't high by historical standards, aren't really sending a signal that businesses are truly shedding labor. So it looks to me like the labor market is in better balance. And it's necessary that when you are in balance, the risks around it are two-sided. And that's a new thing that we went through, 2 years where the only thing the Fed was worried about was inflation. That's not where we are now. They're worried both about inflation, but also about the labor market, and that's why they're going to start cutting.
Eric Winograd, thank you so much for the AllianceBernstein this morning. Look at the markets today. It's a churn in the dollar, churn in the equities. I'm going to call it a churn in the bond market as well. I'm boring myself here. Yeah. Stay tuned to Bloomberg Surveillance. We'll make it more exciting. The 10-year real yield is important. It's under 1.90. I'm going to say it again. We're right at the cusp of support there. A number below that would really be a shift, to see a shift in disinflation. But, Paul, we're really not there. I can't say technically we've seen a breakdown in the 10-year real yield. We just haven't seen it.
No, we haven't seen it. Just, again, across the yield curve right here on the short end, the 2 years, 4.43%. And the midpoint, the 10-year, we're at 4.16%. Even out 30 years, 4.38% on the U.S. Treasury market, Tom.
I'm looking at gold. I mean, you see the gold fillings Barr has?
Yeah, I know, exactly.
I mean, he could retire.
Solid.
Off the
just take those
off the dental work.
Exactly. Bitcoin, Tom, I'm going to call it out. We're on 70,000 watch again.
I did not see that.
64,000. I'm sorry, we're on 65,000 watch. I'm sorry.
Yeah.
64,975.
Why?
Just a little bit of a risk-on feel in the marketplace.
Come on, it's this ETF thing. Where's Belchunas?
Yeah, where's Belchunas?
Can we get? Is he taking?
He's on
it's like the French. Belchunas is taking off the month of July. Is that what we got going on here?
Yeah, he's down in Philadelphia.
We got to get Belchunas on to explain 60 ETF flows with BitDog and what's going on there. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa, it is the fourth and final day of the Republican National Convention in Milwaukee. Day 3 was about vice presidential candidate JD Vance, the U.S. Senator from Ohio.
And so tonight, Mr. Chairman, I stand here humbled, and I'm overwhelmed with gratitude to say I officially accept your nomination to be Vice President of the United States of America.
Vance told his story of growing up in poverty in Ohio while invoking the memory of the grandmother who raised him and his mother who struggled with addiction. Also at last night's convention, Donald Trump Jr.
And the good news is America is Trump tough.
Former President Donald Trump will wrap up the convention with a speech tonight. Meanwhile, with public and private Democratic concerns over Joe Biden's health mounting, the president just tested positive for COVID. Bloomberg's Ed Baxter has more.
The president doesn't seem to be able to catch a break, but the White House has released a statement saying he apparently has caught COVID-19, says he has mild symptoms but is going back to Delaware to self-isolate. So it has taken him off the trail and removed the hope of counter-programming to the Republican convention. And it comes with several news agencies saying that party leadership has warned about the risk of his candidacy. The White House has issued a statement saying Biden is the nominee of the party and plans to win. Ed Baxter, Bloomberg Radio.
Senate Majority Leader Chuck Schumer and House Minority Leader Hakeem Jeffries have reportedly warned President Biden that his continued candidacy hurts the Democratic Party's chances in the November election. At round one of the Open in Scotland, American Justin Thomas is at the top of the leaderboard at 3 under. 6 golfers tied for second at 2 under. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg Tom Paul Lisa.
The postage stamp. It's the 8th hole, I believe, yes, at Royal Troon. The photograph of it looks like where the astronauts trained to go to the moon. Tiger Woods, he's like 20-something. He's like a kid. And it ruined his card. He took a 6 off of a par 3.
That happens.
It is 5 bunkers. And it's like legendary. People talk about it who haven't even played it. And it's out there today. It's one of the holes to watch here. And our team coverage of the British Open.
The postage stamp, yeah. So they're out there. It's a phenomenal course. It looks great on TV because I got just
I love
bunkers
it. It's my favorite
everywhere.
all year.
It's just crazy. Bunkers everywhere.
The putting green has rough.
Yes.
And Troon is the great name for it because you got a lot of golfers yelling, Troon. I mean, it is a tough course. That's why they call it the Open.
One guy took 12 strokes to get to the putting green, and then 3 more to down it. He carded a 15 on a 3. That sounds like that's SAS hour stuff.
Yeah, that is.
Can we get Damien? Can you call him?
He
on the
might
golf
be
course?
over there. I'm not sure. I'm not.
He may be there, but can we get a call in with Damien about the par 3 postage stamp? I'd like to know if Damien Sassower's ever done a 15 on a par 3. That would be good.
It looks good. So anyway, they're over there playing, and it'll
I'm
be
gonna
a
tune
great
in.
tournament. Everybody's there. You get when you get these majors time. You
Did
get
they get celebs?
The
Do they
live
get,
golfers and the PGA golfers. They all come together during these majors. So that's what makes it even more special.
Do fancy people like Lisa Mateo show up?
They might. It's not like being
it's in the middle of nowhere.
Not like being center. At the
center
like court of Wimbledon, right? Yeah.
Wimbledon, you get Uber out of you get the Bentley.
Yeah, this is in the middle of
It's
Scotland,
like halfway to Iceland.
Yeah, exactly. And they get some weather there, so if the wind kicks up and like it is tends to do in Scotland, you'll see some big numbers.
And what's
out there.
great, Huw van Steenis is coming up. He's such a hitter.
I know.
You think he's probably played Truman?
He probably has.
We'll have to ask him in a kilt. I could see him in a kilt. We'll talk about Huw van Steenis here in a moment. What we've got now, red and green on the screen. We're on YouTube. Subscribe and search for YouTube Bloomberg Podcasts, and you'll find it there. You can please subscribe to us. That's how we're building this out. On Apple CarPlay, including in Scotland. Good morning on Apple CarPlay. And Android Auto as well. Really pleased with all that. Huge day. David Gura with Kathy Hochul at the 1:30 point, plus or minus 5 minutes there. On the way to Joe Matthew and Kaylee Lyons in Milwaukee. A big day for the former president of the United States. We're waiting on a Lagarde press conference in Frankfurt. From New York City, Paul Sweeney and Tom Keene, this is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures red and green on the screen, and this is after the latest weekly jobless claims. It jumped the most since early May. Continuing claims, they were the highest in more than 2.5 years. Right now, NASDAQ futures up 0.6%, 126 points. Dow futures down 0.2%, 85 points. S&P futures up 0.2%, or 13 points. The 2-year yield at 4.44%, that's up 1 basis point. The yield on the 10-year 4.18%, and that's up 2 basis points. We have spot gold higher, $2,463 an ounce. Brent crude $84 a barrel. WTI crude $82 a barrel. Shares of M&T Bank, they're higher, up 6%. Reported profit figures that beat expectations in the second quarter, and that was despite falling year on year. Abbott Laboratories up 0.2%, boosted its full-year adjusted EPS forecast. And I thought this was interesting. We've been talking about the heat wave and that we've been under. Well, it's actually giving a boost to Botox sales. Bloomberg reporting AbbVie shot. It works as an antiperspirant, so more people are using it. They're getting injected into their underarms. There you go. That's the new trend. That is your Bloomberg Business Flash.
She does this all day at her desk.
Just to get us,
Get you going.
Get us going, exactly.
Lisa, thank you so much. Let's dip in right now to Christine Lagarde in Frankfurt on the
In line with
ECB.
expectations, the inflationary impact of high wage growth has been buffered by profits. Monetary policy is keeping financing conditions restrictive. At the same time, domestic price pressures are still high, services inflation is elevated, and headline inflation is likely to remain above our target.
Christine Lagarde. I put out a tweet that needs some explanation for this. And as I think some people know, she and I go way back. The mayor of Paris yesterday swam in the river.
I saw
it's
that.
It's a huge deal.
It is.
I don't have an opinion. And I put a joke, Lagarde's doing ECB inflation and all that. And I said, I don't know. I said, Christine Lagarde will not swim in the River Seine. And what people don't know is in her ute, she was a world-class synchronized swimmer.
Really? Okay.
She was like a French champion.
Okay.
And she's like literally the one Politico celebrity that could actually jump in the river and not embarrass herself. Right. So maybe we do want Christine Lagarde in the Senate. We'll have to see. But that's where I put that tweet out. Someone who knows this encyclopedic. Huw van Steenis joins us right now. Huw, I got to rip up the script here on ECB. We stagger from Duisenberg to Trichet on to Draghi in the modern day of Lagarde. How's that ECB experiment going, Huw van Steenis?
Well, great to be back with you, Tom, and glad I'm not swimming in the Seine at the moment, let alone in the Thames. Look, I think the ECB experiment has been painful. You and I have chatted many times over the last, a dozen and a half years, really, since the euro has been introduced, how we've had to have an awful lot of emergency measures, whether it's QE and TLTRO, special bank lending schemes to fend off the Eurozone crisis. Then we had this dangerous experiment of negative interest rates. Finally, we're getting back to a little bit of normality, even if maybe not so normal on the politics side. So I think it's been a very painful experience. And I think, one of the things I put in my op-ed at the FT last week is we still haven't finished the reforms. I was invited somehow to the 10-year anniversary of banking union. Tom, I didn't see you there. But the problem was it's only got one leg finished. Two parts of the house are still unfinished. And securitization in Europe has been basically dead as a dodo for 15 years. And so there's plenty of work still to be done.
I should introduce him properly. Huw van Steenis, Vice Chair of Oliver Wyman, service to the United Kingdom with Mark Carney at the Bank of England, and of course his endowment work with his Oxford University. Huw van Steenis, you sent me a chart the other day, which is your wheelhouse, which is trying to keep track of the shadows to come in banking. And this is always about highest quality tranches, unloading the garbage of lower quality tranches to somebody else. Who's the somebody else this time around?
It's a great question, Tom. So I think that the challenge here is there's no simple picture. So if you take, let's say, our friends at Apollo or Blackstone working with their insurance colleagues, well, insurance companies need investment grade. If they can just get even 50 basis points more than their competitors over a decade to 12 years, that's huge. So in their case, they're really wanting high quality investment grade assets. Clearly, if you're going to get 12 to 15 points of return, you're going to need to be taking a lot more risk. And so there's some endowments, pension funds, and increasingly high net worth, but maybe reaching down. But there is the challenge here is there's not a great data set. And that's in a way why BlackRock bought, that big data company recently. But also it's more complex. I mean, I'm not, look, credit is credit. There'll be a cycle. There's always stuff which goes wrong. So I'm not going to be Panglossian that there won't be problems. But on the other hand, I don't think there's any reason to panic.
Huw, you referenced your op-ed in the Financial Times back about 11 days ago. In that, you say Europe's capital markets are underdeveloped while its banking sector is insufficiently sized to handle the growing demands for capital expenditures tied to energy transition, digital infrastructure, defense. Is there a solution there? I mean, what is the solution?
Look, I think it's a great point. So Europe relies far, far more on the banks. So point one, I would be in favor of trying to, have interesting investment opportunities which fixed income investors around the world or equity ones would want to come and seize. So I think part one is making it easier to list, having more standardization in the bond markets. And in the piece, I was particularly saying securitizations have really not rebounded since the financial crisis. The way the Europeans closed the door after the financial crisis was incredibly penal, and therefore it's never really started. And I think that's allowing banks to package loans and parcel them on to investors is actually a really smart way to help us through Europe's growth. So I think reopening securitizations there. In the next 2 weeks, we might see the Draghi report published. And certainly what my sense of that is that he's going to be also arguing to try and, dust off the plan to reopen securitizations. But it's more than just that. I mean, whether it's, how the US election's going, Europe will need to spend more on defense. It'll need to spend more on energy security, let alone transition, and of course, upgrading its digital infrastructure. These are vast sums, and I don't think the banking system alone is big enough and strong enough. And Draghi himself in Portugal the other day said he didn't think Europe's banks had enough capacity.
But, this is important. Bruce Kasman publishing moments ago, folks, at J.P. Morgan, and he just says global disinflation to continue in the second half of this year. What does disinflation mean, Huw van Steenis, to the financial system? It's constructed as a good. I don't buy it. There's an ambiguity.
So it depends which bit of disinflation we're talking about here. If it's Chinese exports impacting Europe, that's one thing. It depends where we're going. I mean, as we're seeing from the ECB today, there's not massive disinflation. There's quite frankly still inflationary pressures in the system. But at the end of the day, banks are levered plays on growth. And what we've seen is whilst loan growth in the last bank lending survey has picked up a little bit, it's still really low. I mean, in the last decade, bank loan growth in Europe has been half that in the States. And that's because Europe has not been growing as fast. So I think that disinflation and the pressures on exports for Germany, the pressures on growth in France, these are ones which will be challenging. But let's be clear, for every problem there's a solution. In my conversations with bank CEOs and CFOs, they are looking to optimize their balance sheets. The reason why they're partnering up with private credit, only this morning we saw Lloyds, the number one bank in the UK, partnering up with Oaktree, part of Brookfield, is because they want to try and free up some capital to offer dividends and buybacks. Yeah. So look, for every problem there's a solution, and I think that's why the private credit trade in Europe is actually still quite interesting.
Huw van Steenis, thank you so much with Oliver Wyman. I can't say enough, Paul, about the idea there of people with quality tranches looking for 7 basis points or 10. We can get 12 basis points on this transaction. Boy, is that how you get in trouble. Yeah. So, you help me here. 1992, it's a few years ago.
Sure. Remember it well.
Are you kidding me? 32 years ago, Bill Clinton was wearing, a Madras jacket, a plaid jacket? And, it was current then. And, Fleetwood Mac was out there doing Don't Stop. And so the vice president of the Republican Party, JD Vance, he's playing Clinton music last night.
Nice.
It was good. It's a very Fleetwood Mac night.
Fleetwood Mac always works.
The 39-year-old went with something current. Bloomberg Surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in that fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, and Michael Barr. An important Thursday across the nation. The former president of the United States, Donald Trump, speaking tonight in Milwaukee. Joe Matthew and Kaylee Lines with all of our coverage. Before that, David Gura in conversation with the Democrat governor of Buffalo and of New York State, Kathy Hochul, as well. A busy political day here. But also in the markets, economic data out, and The overlay is what I'm going to call solid GDP, Paul. It's not all that bad out there.
No, it's not all that bad out there. We had that retail sales number that came in earlier this week, pretty darn solid. That kind of goes to the consumer. Yes, we have a bifurcated consumer out there. The folks that don't own stocks, bonds, real estate, they are feeling that inflation in a big way. But again, most of the economic data looking fairly solid here. So what's the Fed going to do?
Stay with us on YouTube. Stay with us on Apple CarPlay and Android Auto. The conversation coming up is vital to your confidence to stay in the markets. Linda Dissel of Federated Hermes Pittsburgh will be with us with a really important, clear research note. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
And we've got tech stocks battling back after this week's slump. And that's thanks to a beat from Taiwan semiconductor manufacturing. It makes those chips for Apple, NVIDIA. Its ADR is up more than 3%. So we'll check in with NASDAQ futures up 0.7%, 151 points. S&P futures up 0.2%, 16 points. Dow futures down 0.2%, 108 points. To the bond market, we have the 2-year yield, 4.45%. That's up 1 basis point. The 10-year yield at 4.18%, and that's up 2 basis points. Some more economic data out this morning. Yeah, initial applications for U.S. unemployment benefits rose last week, the most since early May, and continuing claims jumped. Initial claims, they increased by 20,000 to 243,000. And finally, we heard it, the European Central Bank left interest rates unchanged after last month's cut. President Christine Lagarde said that risks to economic growth tilted to the downside. The euro held on to earlier losses. Right now, it's trading down about 0.1% at 109.28 against the dollar. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Joining us now, Linda Dissel at Federated. I really can't say enough about a research note. Full disclosure, she's right where I am, as senior equity strategist there, which is, would everybody calm down and wait for earnings season, which I think is some common sense to it as well. Why is she like this, Paul? Because at Carnegie Mellon, they had at Tepper, they had years ago a course that Alan Meltzer taught. It was called Cart Before Horse, Horse Before Cart. Joining us now, Linda Dissel of Pittsburgh and Federated Hermes. I love your note, Linda, and it's just like calm down and wait for earnings, or is it calm down and wait for earnings guidance?
Well, it's earnings guidance, and I just want to say to you, Tom, thank you for agreeing with me. And I had chills when you said the cart before the horse, because that's the title of this upcoming weekly for me. Have you seen my horse? I'm up here in the cart waiting. And what we're suggesting is just, let's take a break here. Let's take a break from what's going on in the markets and truly running from one place to another. We're 100% sure that rates will be cut starting in September, and that now there's an excellent chance of a Trump 2.0. Can we take a break right here? That's kind of our theme, and we're pulling back from it. And it all important in earnings season, the outlook for margins.
And this is a huge advantage, Paul, that Linda Dissel is in Pittsburgh, which is just about as purple as you get. You go outside Pittsburgh and it's all red, and inside Pittsburgh it's all blue, and it's sort of like purple in the 17th congressional district there. But this is precisely the perspective when you get outside 3 zip codes in New York.
In New York City, exactly. Hey, Linda, one of the interesting aspects just over the recent trading has been the outperformance here of small cap stocks. The Russell 2000 vis-a-vis the S&P, some of that dispersion has never been seen before. What do you make of that?
Yeah, never seen before is something that we're not rooting for. We're looking for a grinding market that's a healthy market. We've said, and at Federated Hermes, we're overweight small cap growth because we do like growth still in terms of the tech trade, but small caps didn't cooperate. It's the whole trade is being made that I'm just going to buy all small caps now, and it's really a tough move out of the semiconductors. Everything is historic in how fast it's happening. So we have expected, as many have, a broadening market as this year progresses. But if you're just moving from one area to the other, you're treating the market like a casino. And we still expect the broadening, though. Just this is trader short covering. Much of what I'm reading is it's technical.
So I guess the broadening of the market, that kind of goes to one of the concerns, I guess, heading into this earnings cycle is, boy, the concentration risk in this market, the Magnificent Seven or whatever that group is these days, it's just such a huge part of the market. How concerning is that to you?
Well, having lived through the tech bubble that burst back in 2000, I know very well, and we all do know, that these are very profitable companies, these top names. Last figure I saw, top, I think 10 names, 37% of the market cap of the S&P, but they represented 31% of the earnings. These are spectacularly profitable companies. So to sell wholesale out of technology to move into these other areas doesn't make sense. Fundamentally, they're very strong. Doesn't mean we're going to have a recession. Doesn't mean that some of these areas of the market, which have been left for dead, nobody cares about them, aren't on sale. And that's what we've been emphasizing. What areas of the economy, the market, are on sale? You go ahead and buy that with maybe some of the cash you have around, rather than sell all your tech stocks.
And, to look at Microsoft, Apple, NVIDIA, Alphabet, Amazon, Boston Scientific, finally, like at Federated, one portfolio run by he's not an intern anymore, he's just brand new, a guy named Stephen Auth. 1 year, 96 percentile, 5 year, 88 percentile. Paul, the 1 year Sharpe ratio is 2.35.
Oh, okay.
Give it up.
Yeah.
That's like the pitcher for the Pittsburgh Pirates that opened the All-Star game. I mean, Auth's having a Skeens kind of year. Paul, help.
Exactly. So, all right, Linda, I mean, we're getting into the meat of earnings season here. What are you looking for?
Well, as I suggested at the outset, we're looking for companies' outlooks on profit margins, because as we've said, we know for the entirety of the economy, we're slowing down, but we're slowing down from a booming situation. So what this all rests on, and really what, if we're having a melt up, a bubble burst would rest on, is just a general slowdown. We have in our overweights large cap value that goes to the large cyclical companies. That argues that they are still priced for weakness versus what we're seeing. And energy is a really excellent example of that, which has been left unnoticed for quite some time. Its price to earnings ratio versus the rest of the market is like the best on sale of any of the sectors. So areas like this, the cyclical sectors, the large ones, that to us would be the next logical move, where no recession in sight. And we can go ahead and bid those up, even if we're not at the beginning of a cycle.
Linda, thank you. Linda Dissel with us with Federated, with the legendary Stephen Auth, I should say. And I'm just sorry, we needed this. Just some common sense. I mean, we've had a maximum drawdown.
Exactly.
NASDAQ's down under 5%. Mm-hmm. Right now, I got a little green on the screen, NASDAQ going here. But come on, Paul, when was the last time we pulled back?
I mean, you think about it, Tom, we really haven't.
Michael Barr was younger.
Exactly. He was much younger.
That's a long time ago.
Exactly. I mean, in April, we had, just about a 5% pullback, not even.
Thank you.
But that's it. I guess that's it here. But again, as Linda Dissel was pointing out, earnings front and center here.
14.28 in the VIX. 10 years ago, you would have killed for a 14.28 on a bull market VIX. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa. The Republican National Convention wraps up tonight with Donald Trump's third acceptance speech as the presidential nominee, his first address since the attempt on his life last weekend. Bloomberg's Laura Davison has more from the convention site in Milwaukee.
Trump is expected to come tonight with a message of unity. This may not be a message of unity for all Americans, but at least for Republicans. He said earlier this week that after the shooting last Saturday, he ripped up his speech and wrote a new one. His former one was focused on attacking Joe Biden, and instead he wants to create one that's more forward-looking and about the future of the Republican Party.
Bloomberg's Laura Davison in Milwaukee. Day 3 was about the GOP vice presidential candidate. Senator JD Vance had a lighthearted moment when discussing President Trump's affection for his two sons, Eric and Don Jr.
He's the man who is feared by America's adversaries, but 2 nights ago, and I'll share a moment, said goodnight to his 2 boys, told them he loved them, and made sure to give each of them a kiss on the cheek. And I will say, Don and Eric squirmed the same way my 4-year-old does when his daddy tries to give him a kiss on the cheek. Sorry, guys.
Vance also told his story of growing up in poverty. Democrats worried about President Joe Biden's ability to win this November are making a renewed push for him to reconsider his reelection bid. ABC News reports Senate Majority Leader Chuck Schumer told him Saturday it would be best to drop out. Meanwhile, Biden is off the campaign trail after testing positive for COVID. Ursula von der Leyen won a second 5-year term as president of the European Union Executive's arm. Von der Leyen, a staunch supporter of Ukraine, vows to keep climate and emissions targets front and center. At round 1 of the Open in Scotland, American Justin Thomas is in the clubhouse at the top of the leaderboard at 3 under. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom Paulisa.
All right, very good.
Michael Barr, thanks so
Excellent.
much.
I'm looking at the the British Open. I mean, the scores are pretty. It's tough out there, man, and it's the wind's not even blowing. But the leaders at 3 under. I mean, there's some big numbers out there that people are putting up. So.
75 and 76. I mean, this is not, where they're 64 and they're embarrassed by the course.
This is no joke out there. So it's going to be a tough test for these folks going out there.
We could, we could go over take the golf stream Saturday, Sunday rounds.
We could do that. Yeah, we could do that. All right.
Do Monday from.
All right.
We're just near Glasgow, right? It's on the west side, the ugly side.
Our pilot.
None of the romance of St. Andrews or Edinburgh. That it's tougher as well. What are you doing on Bloomberg Business Sports this week? I listened last week. It was really good.
No, well, bless you.
Was cogent.
We were talking about. Now, I'm not supposed to say this, but the Olympics are coming up soon, and we did talk to some people. Yes, we talked to some people, and that will be coming up in the future. We also talked about the latest that's taking place in the news right now with what's going on, the big swim that happened. The mayor of Paris,
Anne Hidalgo.
Yep, she swam the Seine, and it's bless her heart.
And she survived. Good for her. But it's still dicey here.
Yeah.
Still a little dicey about that. But I think if you're crazy to be one of those triathlete, if you're a triathlete, you're diving right in.
Yeah. And now, folks, we go to What Matters. We're going to do this with Zach Cohen in a minute. Vanessa Friedman, New York Times, breaking the beard barrier. Michael Barr, the vice presidential nominee, has the Barr beard. What do you think? Garners votes?
Yeah, you know what? And it's nice and neat and trim, and he put the gents gin on
yours?
it, man. Yeah, I know this
Solid.
thing needs it needs
surgery.
a lot of stuff. Yeah. So
okay, well we'll see. We're going to do that with Zach Cohen here in a moment.
Take it to your place, Tom.
Milwaukee.
Lexington Avenue.
Yeah, get some of that aftershave. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Tech stocks battling back. We'll start with the tech-heavy NASDAQ right now, up 0.7%, 157 points. S&P futures up 0.2%, 16 points. We have Dow futures down 0.3%, 127 points. The two-year yield, 4.45%. That's up 1 basis point. The yield on the 10-year, 4.18%, and that's up 2 basis points. We have spot gold higher, 2,462 an ounce. Brent crude, $84 a barrel. WTI crude at $82 a barrel. What's moving the markets? It's Tex-Mex restaurant chain Chuy's. I know, I never heard of it either. It's up 46%. Darden Restaurants agreed to purchase the company. That's the reason why it's higher right now. Then we go to Domino's Pizza, down more than 14% now. Had that disappointing second quarter results. Discounts didn't work, especially that new product, the New York style pizza, definitely didn't work. And then some news from Ford. The company says it's going to invest $3 billion to build its Super Duty F-Series pickup truck at a plant in Ontario, Canada. And that comes after it delayed a 3-row EV at that same plant. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. I wasn't going to do this, but it really works because Vanessa Friedman over at the New York Times, who owns Fashion Up, Down, and Sideways, did a very smart, not snarky essay on beards and mustaches. Okay. And I'm not going to go into it all because I don't want to waste precious Zach Cohen time, but it's a really intelligent look back. It looks modern. Paul Ryan, Al Gore, Ted Cruz, and the rest. But it goes back to, Hubert Heaver and the rest of them. Joining us now, Zach Cohen, the bearded one with Bloomberg Government. What do you think, Zach? How does a beard play psychologically? It's a serious question.
We haven't seen a barbate vice president since, the 20th century during the Hoover administration. Yeah. I think Charles Curtis was the vice president then that had a mustache, and a bearded president, certainly even before that. I think it probably adds to Vance's portrayal as somebody who grew up in the Midwest. He obviously came to fame for the authorship of his book, Hillbilly Elegy, about his growing up in Appalachia, something that he talked about on the stage last night. And as part of his overall image as somebody who really not just solidifies the Trump agenda, really mirroring a lot of the former president's policy platforms, but certainly showing a path forward to appealing to some of the more working class voters, swing voters, blue collar workers that Republicans have been finding strength with.
I'm going to break a rule here, Zach Cohen. I never do this, but I get too much respect for your encyclopedic knowledge. What's the one thing in the political swirl right now you're focused on? What a crazy 24 hours.
Certainly. I mean, just think about Vance's, ascendancy at such a rapid clip. He was only elected to the Senate in 2022 in a really crowded Republican primary, not somebody who was seen as a favorite for that race at all, but ended up getting elected in no small part due to Trump's endorsement over a crowded field of much more establishment Republican figures. So this is somebody that Trump has been currying favor with and boosting for a long time, or at least for the last couple of years. And so I'll be interested to see how his colleagues back in Washington respond to him. He's very close with the freshmen in the Senate, other more populist, Trump-friendly senators. But he's also worked on some really bipartisan issues, with things like Senator Sherrod Brown, the chair of the Banking Committee. He's got a bill on rail safety after the East Palestine derailment. Maybe they could see some movement after this. Certainly his support for cracking down on credit card swipe fees is something that's gotten the ire of the credit card companies, but it puts him on the side of big merchants who are hoping to add some diversity to interchange exchanges. And so I'll be really interested to see not just how he informs the debate on the presidential campaign trail, but certainly if he's elected, how he would shift the focus of a potential second Trump administration.
So we've got, obviously, in Milwaukee, it's not just the president and vice president. We've got senators there. There's a power vacuum. Mitch McConnell leaving the leadership position. Who's going to fill in? Who's going to take that seat?
Well, it's no mistake or no accident that some of the potential successors to McConnell were, in fact, here in Milwaukee. I talked to Senator John Cornyn, a Republican from Texas, supporter party whip and party chairman. He told me he was meeting with senators and potential senators who will also get a vote in November on who McConnell should be replaced with in the Senate Republican Conference. Now, only a tiny fraction of the people here in Milwaukee will actually get to vote on that. It's a secret ballot among 50 some odd people. And so certainly very hard to whip at this juncture. But Senator John Cornyn, the current whip, was also here meeting with donors, lobbyists, McConnell himself, Steve Daines, the Republican from Montana who's chairing the Senate Republican Committee right now, met with him. And then Senator Rick Scott, the third declared candidate, actually had a primetime speech and notably was able to sort of advocate for Trump from that stage, and didn't actually mention his bid for leader at all, but certainly all meant to boost his public persona as he goes for that top job.
How it just seems like the momentum for the Republican Party coming out of this convention is going to be pretty much as good as they could have hoped for. What's the feeling in Milwaukee?
Well, certainly we'll see if this is a sustained momentum or something of a sugar high. Right, we're just a couple of days out from the shooting in Butler, Pennsylvania, that wounded the former president. Polling is a little scarce at this point to see precisely how much that may or may not have boosted him, but certainly you feel the energy here in Milwaukee. People are energized by it. We could see more turnout and more activism from Republicans who would like to see Trump back in the White House. But Democrats will get their time. They've been a little more aggressive a couple of days after, especially after Vance's selection, and they'll get their convention in Chicago next month.
Well, that's where I wanted to go. What's your reporting on the mood of members of the House of Representatives and the Senate as they stagger to Chicago? What have you learned in the last 24 hours from Democrats?
There's been some reporting that Senate Majority Leader Chuck Schumer, House Minority Leader Hakeem Jeffries, both had their sort of Nixon Goldwater moment and went to the White House and told Biden in no uncertain terms that they have a problem.
What do the
at the top of
troops
the
say?
ticket.
Zach,
and
what
certainly
do the
there are
troops
other.
say? Yeah.
Well, Schumer wouldn't be going, and Jeffries wouldn't be conveying that message if they didn't have the backing of their caucus behind them. There's clearly a lot of concern from lawmakers that Biden's numbers are not where they need to be in order not just to win the White House, but to win back a majority in the House and to keep their very narrow majority in the Senate. So it does remain a concern. Now, we're a couple of months out. A lot of things can change. We certainly didn't expect to be talking about an assassination attempt a week ago. But at this juncture, the numbers are not looking good for Democrats, and I think they recognize that.
Zach Cohen, thank you so much. Try to get some sleep. In Milwaukee here, and of course, the former president speaking tonight, I should say. He's a bearded one. I used to have a beard.
Oh, yeah?
I had a beard, this is ancient history.
Okay.
There was no gray hair.
Feel free to bring it back. I mean, I think that our audience would love to see it.
Yeah, I do it on a vacation sometimes.
Okay, I hear that.
This morning, because of the move in Bitcoin, Alex Steele has stepped aside.
I know.
And you have one M. Miller.
Coming in the 11 o'clock hour.
The 11 o'clock hour.
Yeah, he's doing his TV gig now, but he loves his radio, so I can.
He's going to come in and we're going to talk 65,000.
Yeah, sure. I mean, he's got his token. He just can't find the code to unlock it, which is so Matt Miller.
Yeah, can I just say, as a stupid one, that there's a scarcity of Bitcoin. So if all this ETF money comes in, by definition, it goes up. Right.
Right. And we saw that right when the when the Bitcoin news broke. That's what we saw. We saw Bitcoin go to 73,000, something like that, off of 50,000 levels. So that was the little trade there. It's since kind of pulled back and gyrated. And it's a volatile asset class.
Turn to the market here. NASDAQ rebounds off the carnage yesterday. And all I can say is I'm with the Linda Dissel crew. It's like, okay, it was I don't even want to use the word drawdown, which is, fancy jargon for south by a little bit.
Right.
But let's wait for earnings and be measured and look at what organic revenue growth is and maybe go down the income statement.
Some fundamentals, exactly. Look at revenues, earnings, free cash flow, that kind of thing.
It's an odd time. And, of course, the politics is odd as well. Zach Cohen among many of our team in Milwaukee here. Look for Kathy Hochul with David Gura in the 1 o'clock hour today, and then Joe Matthew and Katie Lines leading our coverage in Milwaukee. Red and green on the screen, SPX up 14. Dow takes a breather after a torrid 48 hours. From New York City with a VIX 14.30. Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. Now, we've had some more economic data out to influence the markets, but how much of an impact will it have? We're talking about news from the Labor Department, the latest weekly jobless claims. They jumped the most since early May. And continuing claims, they were the highest in more than 2.5 years. Let's get to the numbers as we start the open. The S&P 500 right now up about 0.2%, 15 points at 5,603. We have the Dow down 0.3%, 112 points, 41,086. The Nasdaq up 0.6%, 123 points at 18,121. We head over to the 2-year yield, 4.45%. That's up 1 basis point. The yield on the 10-year, 4.18%, and that's down 2 basis points. We have spot gold higher, 2,466 an ounce. NYMEX crude, $82 a barrel. We have Brent crude at $85 a barrel. At the open, I want to check in with Taiwan semiconductor manufacturing. It really helped give that boost back to tech stocks. Right now, it shares, its ADR's up about 4%. That is your Bloomberg opening bell report. Tom and Paul.
I'm learning every day. Okay, thank you for this. Somebody just emailed this in. Very informative. Mr. Payne. See y'all at Chewy's. Better bring a friend or 5 because we're a whole lot more than just the best Tex-Mex.
Tex-Mex.
In town.
I love Tex-Mex.
This is the kind of place Joe Weisenthal would go.
Yes.
I mean,
and where are these guys? I've never heard of it. But
it's like Texas. I never heard of it.
Okay.
Lisa, help us here.
I've never, that's what I said. I never heard of it. I guess it's not from around here.
No, it's down south.
Yeah.
1982, Austin, Texas.
Okay.
When's Odd Lots on? Come on, Bob. We got to do. Tell Joe and Tracy we're doing the whole segment on Chewy's.
Yeah.
Who's taking them out?
Darden.
And they own everything, right?
Yeah.
I mean, Darden's like the, all the fast food
It's a trip
brands.
down memory lane.
It is. All right, big deal.
Awesome. Austin, Texas.
Yeah.
Joe Mazzola goes there, chows down. Joining us now from Charles Schwab on trading. Joe Mazzola. Have you ever been to Chewy's in Austin, Texas, Joe Mazzola?
Have not, but you're making me hungry, guys. So, I got to get to breakfast here pretty soon.
It's like Ben Chili Bowl in Washington, except it's like, it's like a Darden's kind of thing. I can see it. Joe, help me with volume here. I'm not a big disciple of volume analysis. Are you? And what does volume tell you now in the stock market?
Well, let me take it in the direction maybe breadth, if you don't mind, Tom. With the breadth that I'm seeing is really interesting, not only on the top level, but below the surface. We've been talking about rotation now for a few days, so that's nothing new. But taking a look kind of at what we're seeing with the market breadth, percentage of stocks above the 50-day moving average. This was something a couple weeks ago where we were saying, hey, rally could be in trouble because we're just not seeing enough of the components trading above those averages. Well, we've seen massive expansion really in the last week alone. We're about 75% of the S&P 500 trading above the 50-day moving average. We've seen an expansion in the Russell from about 38% to close to 75% there. So below the surface, we're starting to see some of the soldiers catch up with the generals. I think the question going forward, guys, is, can you get a pullback with those generals? And is it sustainable enough with that new rotation to continue to see the overall indices rally?
So talk to us about this rotation into the small cappers. The Russell 2000 has really had a rip over the past week to 10 days. And relative to the S&P, we've never seen that kind of outperformance. What do you make of that? How much of that is real versus, I don't know, some kind of technical trade? I don't know.
I mean, it could be a catch-up trade component to it, Paul. I mean, absolutely. If you look at kind of the divergence between the two indexes, I mean, we got the levels we haven't seen in multiple years between, say, the NASDAQ and the Russell kind of coming into the last couple of weeks. You got the negative print on the CPI, and it was kind of a bit of a jet fuel for some of the underperforming Russell names to kind of catch up a little bit. Like I said, it's the continuation. We've seen fits and starts over the last couple of years where we have started to see some of that convergence come back. It lasts about a month or two, and then when you start to see maybe some softening economic data, people tend to rotate back into the mega caps. I think I think this will be a really interesting test, and I think earnings are what's really going to kind of give us an idea where we're headed.
What are you expecting to see out of earnings here? I think because we're kind of getting into the meat of it this quarter. What are you expecting?
Sure. Well, I mean, as we look to tech, I think that's going to kind of be an important leader. Basically, the street is expecting, the overall market, or at least the S&P 500, to increase about 9% year over year in terms of earnings. Still, a lot of that will be priced into tech. I think tech is probably, going to lead some of those earnings. But I think the influence of tech, maybe over the next 6 months or so, might begin to wane. At least that's the expectations. The expectations is that some of the other sectors are going to catch up, and that maybe some of those mega caps, you're not going to see those 30-40% kind of year over year expansions in earnings. And if that's the case, once again, can you hold up a market without those leaders?
Have people at Schwab, your clients, have they, as a general statement, become more conservative, or is there an exuberance?
So that's a great question, Tom. And let me talk about this from two lenses: attitudinal versus behavioral. So if I look at back in the data that we got at the end of June, we did see a lot of push back into those mega cap names when you got some sell-offs a little bit in NVIDIA and Broadcom, maybe post-earnings announcement. Those were some of the names that people really kind of stepped back into. However, when we did a survey, the attitudinal side, basically now we're trying to go align the two on a monthly basis. And one of the things that came out of that survey was, hey, we're concerned about maybe some of the valuations for these AI stocks. So it'll be interesting as we get the data, to continue to come out through the rest of the month, whether they have pulled back a little bit. In the overall market as a whole, I'm still not seeing a lot in terms of the hedging that would show that the market's getting really concerned at
So
these levels.
this is critical. You don't see the exuberance now that's witnessed by hedging or lack of hedging.
Well, no. So I see some of the exuberance in terms of the call buying, right? I think that's important. I still see those call skews for a lot of those tech names. And when I say that, what I mean is, this spread between what they're willing to pay for the implied volatility on the downside hedges for the puts versus what they're willing to pay for the upside on the calls. So you're still seeing that. And I think that's important. Here's another one as well, too. The Russell. We look at the implied volatility of the Russell. We tend to think that implied volatility goes up when the markets go down. You're actually seeing implied volatility really start to pick up in the Russell because people are trying to do that catch-up trade and buy some of those calls on the upside as well. So yeah, if I look at it from that lens, there are some signs that there is some of that exuberance, maybe not to levels that we've seen in the past, but there's at least some signs to keep an eye on.
Joe, thank you. Joe Mazzola, Schwab, with us today, head trading and derivatives strategy, the dynamics of the market right now. Dynamics of the market, Warner Brothers Discovery on the mat at $7 a share. Just in the last 1, 2, 3 sessions, it's a 20% pop. Paul, thank you for telling me about that.
Exactly. So, I mean, I think the news out today is the FT's reporting that Discovery is, thinking about maybe splitting up the company a little bit. They've got, I think the way they're thinking about it is some of their better valued, higher growth stories, such as their studio and the streaming business, putting that in one company and putting as much debt as they possibly can on that.
Chrysler a million years ago.
Yeah, exactly. And leaving the legacy TV business to
the bondholders get run over.
It could very well be, because I mean, I think the issue here is they have, as you mentioned, $39 billion in debt. They've got about maybe let's call it $10 billion in EBITDA. So that's roughly 4 times net debt to EBITDA. That's high. It's manageable, but it's high, particularly when your core business, the legacy cable networks, are in decline. So bondholders are very nervous here. And whenever you see these splits, reorganizations, if you will, the key question for the bondholders is, okay, where does the debt go and what assets and what cash flow are supporting that debt? So that'll be the issue.
This is 10-year piece. That's what bond pros say, folks. Oh, nice. 10-year piece, and it's enjoyed going from an 88-ish down to an 86-ish. So you've taken 2 points out of that 10-year piece. This is 4.28% of 32, yielding right now 4.6%. 0.38%. See how I
Yep.
did that?
Very good.
I just
I
did that for Mr. Bloomberg.
Yeah, exactly.
He thinks I've never gone to the YA school. He told me once. He said, Tom, you would know a bond if it hit you over the head. I said, yeah, me and Michael Barr with our news in New York City bond guy, Michael Barr.
Thank you very much, Tom, Paul, Lisa. JD Vance used his address to the Republican National Convention to share the story of his tough upbringing and make the case that his party is the best to understand the challenges facing struggling Americans. Vance says he wants to help Donald Trump take back the White House in November.
A leader who rejects Joe Biden and Kamala Harris's Green New scam and fights to bring back our great American factories. We need President Donald J. Trump.
In his first primetime address since becoming the GOP nominee for vice president, the 39-year-old Ohio senator spoke of growing up poor. Former President Trump will speak tonight to close out the convention. Senate Minority Leader Mitch McConnell is calling for new leadership at the Secret Service following the assassination attempt on Donald Trump. Bloomberg's Amy Morris has the details from Washington.
Senator Mitch McConnell posted on X that the shooting was, in his words, a grave attack on American democracy and that new leadership at the Secret Service would be an important step. House Committee on Oversight and Accountability Chairman James Comer has subpoenaed Secret Service Director Kimberly Cheadle to appear at a hearing on Monday. Lawmakers say they'll hold a bipartisan probe focused on the Secret Service, and President Biden ordered an independent probe. The Homeland Security's Inspector General also opened its own investigation. In Washington, Amy Morris, Bloomberg Radio.
President Joe Biden says it's still early in his re-election campaign and that many people don't focus on the election until September. On Univision, Biden said everything so far between Trump and me has been basically even. Democrats, worried about Biden's ability to beat Donald Trump in November, are making a renewed push for the president to reconsider his re-election bid. Meanwhile, Biden is off the campaign trail after testing positive for COVID-19. Finally, at round one of the Open in Scotland, American Justin Thomas is in the clubhouse at the top of the leaderboard at 3 under. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
I'm learning every day. I get up, folks. You know, I got like 3 alarms, and the butler helps. And I get up, and I get in the Bentley, I slide in, and the only reason I'm doing this is every day I learn something.
Yep.
It's not the British Open.
That's right.
It's the Open.
It's the Open.
Championship.
The Open.
Yeah.
The Open Championship is how they prefer it.
And it goes back to 1860.
Sure.
And if you really want to start a fist fight in England, this is Scotland. This is
yeah, exactly.
You don't call it the British Open. What
Yes.
are we?
We're
That's all we.
We're efforting with Westwood One to get it.
No, I don't forget about Westwood One. I've been calling it the British Open since my youth.
Well, we Americanized it and called it the British Open, but it's really, and my buddy who is an avid golfer, he got on me. He said, "Stop calling it the British Open. It's the Open." And I'm okay. You got it, buddy. And I remember that ever since.
Well, I'm just looking at the menu for Chewy's here. I mean, we've got to get down there.
They're not catering the Open.
No, they got the famous enchiladas. We got fajitas here. I mean,
Jess Menton's people. We're efforting Jess Menton for
yes.
tomorrow.
Okay.
Her people called. They're not sure she could do it. She lived at the College Station Chewy's.
Yes, exactly.
I mean, it's embarrassing.
Yep.
I mean, she was there 4 nights a week.
It's incredible.
Thursday, Friday, Saturday.
Yep, the ponchos,
NFL ball.
Tostita chips, refried beans, cheese, and your choice of fajita chicken, fajita beef, or seasoned ground beef. Wow, that gets the meal started.
Do you remember when Darden's was upscale? Like you were so broke, you know?
Yeah.
You go to Shea Waffle House. We used to call it Shea Waff. Shea Waff. And if you had money, you went to Darden's because that was pretty fancy. Good morning. Speaking of Rochester, I hope everybody's safe up there with the tornadoes. Nick Tahoe's is where you went. There was a place on Gitsy's when you were like counting quarters. Not that I ever did that. Green on the screen right now. Dow up 37 points. NASDAQ rebounds. A bit of a rebound. I'm with Linda Dissel. I'm waiting for earnings season. We got through the banks. They did better than good. And we'll see what we get for earnings and guidance. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen on Thursday. We have the NASDAQ up 0.1%, 27 points, 18,026. The Dow up 0.1%, 53 points at 41,249. The S&P 500 up 0.2%, 10 points at 5,597. The 2-year yield at 4.44%, little change. The yield on the 10-year 4.17%, and that's up 1 basis point. We head over to shares of Nokia. They are lower. They're down about 6% right now, and this is quarterly sales. And Q2, it missed estimates. They were the lowest since 2015, so their shares lower this morning. And then after the close, we have Netflix. Right now, their shares up about 0.7%. And you have a lot of people going to Greece this summer, but not everyone happy to see them. Tourism, listen to this, straining water supplies, hurting vineyards, and that may mean no showers for visitors. I guess I'm not going this time. That is your Bloomberg Business Flash, Tom and Paul.
Lisa, thanks so much. I'm really remiss, Paul, in not mentioning this at 7:00 this morning. When I came in this morning, I was distracted. I was, ordering from Chewy, not Tex-Mex Chewy, but Chewy. I was ordering, the dogs were, they were a disaster, the storms. There was where I am a ginormous limb down and on top of cars.
Really?
And I'm saying this for New York City, but wherever you are, walking in Central Park today is not routine.
Ask Molly Smith from a couple of years ago.
Really serious. Yep. When you have a horrific storm like we had last night, just be really observant of the branches and the different trees, because hours and hours and hours, particularly with a little wind, is not funny.
Nope.
This is like a serious thing as well. Paul Sweeney has had on the brain high yield debt. It's all he's been talking about, except Duke football opportunities here into August. Why don't you bring in our next guest? These people are like full time. 4%'s not going to do it.
No, I mean, and our next guest is one of those West Coast bond people, and I classify them as West Coast. They're PIMCO, they're TCW. You never know what's going on with these people. St. John Bowron joins us. He's high yield bond and senior bank loan portfolio manager at Beach Point Capital Management in Santa Monica, California. Are you kidding me?
Tough.
I mean, you can't work out there. St. John, thanks so much for joining us here. I'm looking at my IN screen on the Bloomberg terminal that gives me the Bloomberg Index browser, and I look at fixed income in the U.S. I actually see green for the first time, so congratulations. You guys are finally making some money. But boy, the big outperformance has been in U.S. corporate high yield. Can you talk to us about what's going on in that part of the market?
Sure. Well, good morning. Thanks for having me. In high yield, it's performing quite well, and that's in large part because of incredibly strong credit fundamentals, an incredibly strong and resilient economy, and the attractiveness of the asset class in terms of the yield and the price make it a very compelling investment.
All right. So are there sectors within high yield? Are you just looking for the best credit profile?
Well, we at Beach Point are bottom-up investors. So we build our portfolios credit by credit. And, overall, that comprises our sector allocations. In general, most sectors within the leveraged credit universe, so that includes both high-yield bonds and leveraged loans, are performing quite well. As I mentioned, credit fundamentals are strong, corporate profitability, even within the leveraged credit universe, despite higher rates, most issuers are doing quite well. There are some sectors with higher competitive dynamics, like cable and telecom, for example, which have been dislocated for going on, a couple years now. And in addition to that, because of higher rates, you're also seeing higher dispersion. So not necessarily on a sector basis, but on an individual credit basis, there are a lot of credits, call it the lowest kind of 10% of the overall leveraged credit market, that are struggling because they entered the rate hiking cycle with balance sheets that were already levered. And to the extent that they don't have the pricing power to match the inflationary pressures that other issuers do, those are the ones that are suffering the most.
St. John, I say this with immense respect. I'm not trying to be snarky. How do you know when you're buying a higher yield that you're not a yield hog? Because everybody I know that goes out and does a higher yield, oops, down the road. What's the number one skill set to avoid being a yield hog?
Well, it's a great question. So we tend to look at yield on a risk-adjusted basis. And by that, I mean, we're looking at the underlying credit fundamentals of the business model. And then secondarily, how is that business model capitalized through its balance sheet? And the capitalization of the balance sheet depends on the type of bonds or loans that that are comprised to finance that business model. And we think it's incredibly important to look at bonds and loans through a legal lens and to have legal expertise as part of the investment platform. At the end of the day, a bond and a loan is effectively a contract. And so understanding the nuances of those contracts is incredibly important.
Yeah. I mean, I know you're by the pool at the Sunset Tower with David Zavlev, chatting away here. The disease now, St. John, is there's no covenants. You're talking about the rules of the road and the legal document. Do we have shadows or challenges out there because there's too much covenant light? This is a East Coast phrase. Yep. Garbage out there. Is there too much, St. John?
Well, I don't speak French, but garbage is certainly, I think I understand the translation. And covenants certainly have been eroded. It's one reason why we're seeing more of what we call liability management exercises, or LME, in the market, in which companies are trying to extract value from their creditors to lower the overall financial leverage on their balance sheets. But in general, covenants tend to ebb and flow with the market because in the post-COVID era, we've experienced a relatively healthy credit market. And that's, really 2021 was sort of the high point. And then through the rate hiking cycle, despite the new issue market, really drying up, you're still seeing credit being created at relatively looser terms from an historical perspective. And so, through that, you in some ways you have to build in margins of safety to get that attractive risk-adjusted yield I described earlier. In other ways, through asset coverage and so forth. But from a covenant perspective, we at Beach Point like opportunities where we can provide commentary and feedback and influence certain deals in order to shape the covenant packages to build in better protections for bondholders.
It's such a West Coast thing. They buy bonds and then they start telling management what to do. St. John, this was really valuable. Thank you so much. St. John Bowen with Beach. Help me here, Paul.
Beach Point Capital Management.
Beach Point Capital
can you put
Management.
Beach in your name?
You can do that.
Because they're in Santa Monica. They're in Santa Monica. How big is
they
that?
go down Sunset Boulevard, and there's a guy there rolling Cuban cigars.
Sure.
Right there. It's in the old biker district.
Yeah.
And that's St. John's doing that on a daily basis.
Santa Monica, one of my favorite
I
hotels.
learned a lot there. That was very good.
He's good. Shutters on the beach in Santa Monica.
It's like the Padres playing in San Diego. How can you be serious about running money in Santa Monica?
And the thing is, you got to be at your desk, like 4 a.m.
Oh yeah,
you got to be on New York time, and it's tough. And I've known a million people on Wall Street that work on West Coast hours, and they tell me the same thing. You never get used to it. Never get used to it.
Never get.
And it's always think, you could be on the golf course at 1 o'clock. No, you're not.
I learned a lot today. What I learned a lot, particularly from Zach Cohen, is pay attention to Milwaukee. These are historic times, and we've underplayed it. We've really tried to avoid the speculation, the rumor that's out there, frankly, with both parties, but particularly in the last 18 hours with the Democratic Party and with our President of the United States. This is extremely fluid right now for the nation across our national politics. And please stay with Bloomberg Opinion, Tim O'Brien's people writing up opinion, but our reporters, including Kate Eckley, who joined us early this morning as well. I don't know how you link the Trump trade. I'm not there.
I don't know.
Not there.
No, we are going to have Balance of Power coming up at noon Wall Street time, and Joe Matthew and Katie Lyons, and they'll kind of drive that conversation forward.
Kennedy Center night. You talk about Santa Monica. This was produced by one of my heroes, Ed Cherney, who we lost to cancer terribly early. Bonnie Raitt tonight, Kennedy Center. Thank you, Nathan Hager.
she'll have to choose, and it tears her up inside. She's scared to run.